To be here with Dirk if he finds his way. ahead and drop them in so we can answer your questions. There we go. Hello, Dirk.
Test.
I hear
Can
you.
anybody hear me?
Welcome.
Well, finally, this microphone is giving me a headache here. Good. How's everybody doing? Good to see you. I actually this morning was thinking like, we're going to start this now, and today, this morning, on a Monday morning, no technical hiccups anymore. And well, here we are. Jokes on me.
You jinxed it.
I jinxed it really. How's everybody doing? Dina, for you, it's like actually still in the middle of the night. You should be
It is.
asleep.
It's still it's completely dark out.
But instead you are
But,
trading gold for the London session already like a good trader should.
hopefully we'll see what happens. We've had some move in the indices over the early London session as well. So, you can get good trades any time of day pretty much. Hello, Lewis. Welcome. Naveed. Welcome.
Good morning. Lewis again. Naveed here. Danny. Is the feed now okay, Danny? Or is there still something off? I believe it was because somehow I had a bit of a hiccup here with my microphone interfering with other USB devices.
It happens. Early Monday morning, your microphone's not ready to get back to it, I guess.
So I hope really this is not going to be foreshadowing for the week ahead, because we have quite a busy week ahead, really. We have first and foremost a lot of, and I mean really a lot of economic data coming out. I think it's safe to say that today on a Monday is still going to be the day that's kind of more relaxed. That's probably going to be more driven by the technical side of things. Tomorrow we are starting very early already with GDP data from Spain. So this is going to be interesting, followed by Wednesday then by the other major European countries. I say major because I've only the one listed here that are likely to impact the markets. We have tomorrow the JOLTS job opening coming in the USA, which are going to very much foreshadow what is coming out on Friday, which of course the non-farm payrolls. And last but not least, we have an interest rate decision coming up this Wednesday, which, by the way, is pretty much set in stone. We can talk about this a little bit later on as well. But it's probably going to be a kind of a non-event. 97.4% according to the CME group are expecting at the moment that the interest rates are going to stay unchanged, which is pretty much in line also with the stuff we've been hearing from Jerome Powell. Nonetheless, of course, the interesting thing is going to be after the release of the interest rate decision at 8 p.m. Wednesday, 8 p.m. CET time, so Central European time, that is 30 minutes later. The press conference is going to be interesting, of course, what Jerome Powell has to say, if he can indicate already that we are going to see maybe interest rate cut in September. Looks more like this at the moment. Dina, how are you preparing as a trader for a week like this? I think it has been a while since I saw really a week so full of really important economic data releases like we're expecting this week. How do you handle something like this?
Yeah, this is a lot of news going on this week. But for me, this means most likely there will be movement in the market, right? And I need movement in order to make money. So, of course, I can lose money that way as well. But I like weeks like this because this means there are a lot of volatility influxes in the market, and price will likely be moving one direction or another. So, the first and second week typically are, my favorite weeks to trade. It can get a little harder to see as much volatility and action on the second half of the month. So for me, this is great. I'm ready for it. I'm excited, and should be a good week.
Likewise, for me also, it's like normally I would always tell, be a little bit careful around the news events. By the way, you remember, guys, if you have what is it? I think the high stakes account, you're not allowed to open new trades. That is 2 minutes before an important news release and 2 minutes after important news releases. What are important news releases? Well, if you are using TradingView and you go to this little economic calendar here and you filter by those only by high importance, you're pretty much on the safe side. And then, of course, if you're trading, I don't know, New Zealand dollar versus yen, something like the JOLTS job openings are not going to affect you there. But if you're trading pairs that are denominated, for example, then in US dollar, you want to be careful there with I think it's the high stakes account. Let me quickly see again before I tell you something that is just completely not correct. Yeah, high stakes account. Yeah, that's the one. Yeah, other than that, a week like this, of course, always also good for seeing a lot of movements. So there is going to be, I'm very sure of that volatility. The question is, are we going to see the volatility today or not? Have you been looking at some trades already? I know you're busy around London opening always. Maybe I switch over to your screen because
Yeah,
I do
usually busy sleeping, right? Every now
busy,
and
busy
then,
sleeping.
yeah, something exciting happens, and I'm looking at the indices as always.
Oh, we
So this
nice
is
gap opening to the north, yeah, in the S&P
yeah,
there. Mhm.
right. So we had a huge gap opening. So this is the 1 hour on the left, and price opened from like 28 to 50. So about a 22-point gap. So really big gap, and we still have the gap remaining. So on the daily chart here, it looks so unusual because price is floating up in the sky here, really high up, and has not filled that gap yet. So um, that'll be something that I'm paying attention to as time goes on. If that gap gets filled, most of the time gaps do get filled. However, not always, right? So there are a couple gaps that we had back. It seems like it's been a while now, but here is a daily gap where price gapped up into from Friday into a Monday and never came back and filled. And same here as well. This was a midweek gap, but a significant gap. Price tapped into it a little bit, but never fully filled it. So typically, price gaps do get filled, especially larger ones like that, but not necessarily. So I will be watching this gap and paying attention to that. But so far, price has not made it into that gap yet. So uh, kind of had this little run up, went slightly above the opening gap high, and then dropped from there. So it'll be interesting to see what happens as time goes on. If we get some kind of support at a level here and then push higher, or if price wants to dip back down and fill the gap. Are you looking at indices at all early in the London session, or looking at something else so far?
I actually had something. I took two. No, I'm lying. I took 3 trades over with me from last week in the NASDAQ, which is something I usually do. But since I've automated all of that trading that's going on my Fivers account now, I had these 3 trades from last week still that I opened. So that was this one, and this one. And I usually have a stop loss there of 80 points in the NASDAQ and a take profit target of 150 points. And because that was not fulfilled, where I took them over, but they were executed. We can have a quick look. That is this account here this morning. We actually did one more already, the last one was this morning. So these trades here were taken over. One thing really I noticed here, which you have to be a little bit careful of, when you carry positions over to a new week, so you don't close them on a Friday evening. First of all, you of course have the risk of that the market, for example, is opening with a gap, which it did this morning, a favorable gap for me because it was an up gap, that you're in danger there, of course. The gap could be below or above your stop loss already if you're short. And the other thing is you want to be really careful also with the swaps. So the overnight financing, you can see on these 3 positions here, it's really, maybe I have to zoom this in a little bit so people can see that better. It's really quite high. So the swap was here. Now I have to zoom out because you cannot see everything. Here we go. $5 to $7 for a position of 0.63 lots. But nonetheless, this is all automated since this trade here. So looking quite good. So the account, this is the bootcamp account, is on the move now as well. As I said last week, the gold trading account. I passed evaluation number 1. So this one started, that was this one exactly. And now which is the active one? This one. No, this is a boot camp. This is high stakes. Sorry. This is the one right now, which already traded 2 trades as well. One positive, one where I was stopped out this morning. But I'm trading a risk reward ratio of 2 to 1. So for every trade one, I can lose 2 trades and still not lose money, which is always the beauty of having a proper risk management attached to your what did I want? I lost because I read a comment just now.
in your trade
I
system.
got like, are you talking about B4X Guru? Why your chart is this much complicated? Which chart do you mean? Or are you talking about Dina's chart?
Yeah, maybe my
Maybe
chart. Yours doesn't look complicated at all.
this one at least not. I hope so not.
I
Because
don't think mine is complicated
no,
either, but maybe if you're maybe
Dina,
if
I think you are looking at multiple time frames. No, that's yeah.
absolutely. Yeah, absolutely. So
But
I have
something good. Maybe you want to give people a little bit of a walkthrough, because I quite like your setup of having like multiple time frames on there, to not just be focused on like the 5 minute or 50-minute charts, which
yeah.
I know a lot of beginners are focused on.
Yeah, so, especially as time goes on, I rely more and more heavily on the higher time frame. So I use the daily time frame quite a bit. That's something that I really pay attention to, even for day trading. So I have 3 charts on here, 3 time frames. I really only need 2. I don't pay that much attention to the 4 hour, but I like to keep an eye on it. But primarily, I'm looking at the daily, which is this on the upper right hand corner, and then the time frame I keep an eye closest on is the hourly, which is on the left here. So, as far as complicated, it looks pretty clean to me. I mean, I have levels on it that help me give this to me is a little bit trickier because you don't know where you are in price. So it's kind of like putting a roadmap to remind you where you are and what levels are important. So it's not complicated to me, but I guess maybe if you're not used to looking at it, it could be complicated. I had a question for you with when you're trading with bots. Um, in the high stakes account
Mhm.
is the one that you cannot trade 2 minutes before or after
Yeah.
news. So do you manually turn your bots off, your EAs
No.
off?
No, I at the moment I'm just going with it and risking it, because my bot
Okay,
usually only trades when a trend is confirmed. So it wouldn't
I
really
see.
trade like on the move itself. It would usually wait for the pullback first, which
I
usually
see.
takes more than 2 minutes. But it's a valid thing. So I'm eventually going to build in a filter,
Okay.
like 2 minutes before high impact news, 2 minutes after. You can connect in MetaTrader 5 economic calendars, do not open trades. But
Okay.
when like my over the years, like my go-to thing when I slowly start automating my trading strategy, is always like do it one step at a time. Like don't do it all at once, because you're always almost there's 100% guarantee that there is still a bug somewhere. So I'd rather have it like in the plain vanilla version first, see if it behaves
Mhm.
correctly for a week. If everything is correct, then I can start adding on new things. But the chance that it's going to trade 2 minutes before or after a news impact is very, very slim, because there are
Mhm.
also not so many trading signals. Like since we had one, for example, here on the when was the 25th of July, and the next one now was this morning on the 28th. So sometimes
Mhm.
it can take like 1 to 3 days until there is a signal. And yeah, I mean, chances are very slim, but of course not non-existent. So you are right. Eventually, then needs to be a filter.
Mhm. Yeah, that makes sense. Yeah, I'm gonna Danny
Yeah.
asked a question about my chart here, and I will. So yeah, so let me just walk you through kind of what I would actually be looking at, what I am actually looking at as I go through here. So, like I said, I keep the 4 hour up here, but I'm mainly paying attention to the daily and the 1 hour. So, we I haven't been on the London session, I don't think ever before. I'm pretty sure I've only been New York and just prior to New York. So one of the things that I really pay attention to is the previous day low and swing lows. So you can see I have marked out here different areas where this, for example, actually this was where price took out previous day low and closed up. It just barely closed inside the previous day low. But it also took out the swing low. This is a high probability setup for me, even though it did end up gapping down. This was a Friday to a Monday. But here's another example that we talked about more recently where price took out the previous day low, took out a couple swing lows, this one, and it doesn't look like it, but this one here, and then pushed higher. This is a super high probability setup that I pay a lot of attention to when price not only, it's not enough for it just to drop below, I want to see it come back above. So it came back above here and launch this big move. So paying attention to previous day high and low, or previous day low in particular with the S&P, super duper important, something that I am going to be tracking carefully, even for day trading, because it's such a high probability setup. So when I'm looking at the hourly, I'm also keeping in mind what's going on with the daily, but I might there might be setups aside from, taking out the previous day low that could also be of interest. So the black lines that I have marked out here are just different levels. Again, just trying to give me a line in the sand so I can kind of keep track of where I am, where price is, and I just have important things marked out. So like this was the gap that, let's take that off because it's a little bit messy there. But for example, last week, this little green box that I have marked out, initially it was just this. I was watching this consolidation. I woke up, I think somewhere around here. Yeah, this is where I would have woken up. And I have it on the 30-minute. And drew this consolidation. And right around, for me, this is early morning. Price came down, took out that swing low, and pushed higher. So I'm just kind of like marking areas that are important. Previous day low, this was a swing low. I have an indicator on here. It's not really an indicator, it's just a tool that helps me keep track of NSDT daily key levels. Automatically marks, swing highs and lows. So
I was just about to ask, what is NSTD?
NSTD is North Star Day Trading. If you are on TradingView, you can see this is one of my friends just has a lot of indicators here. They are available in TradingView, but you can find other ones as well. But this is one that I just use to mark out previous day high and low. I still usually mark them out myself manually as well, but it just marks and labels the highs and lows. So that's it. I'm basically, marking out important levels. You can see like supply and demand areas where this was kind of a resistance level, price dip below and back and forth around that line. So marking out those levels that might be important. And again, it's just kind of like a way to keep my my space, you know what I mean? I'm not saying that very well. Know where I am in space. So one of the things that I did here too, this was, I think we talked about this last week, Dirk. This is just arbitrary.
Exactly. When I ask you about those green to gray boxes, yeah.
Yeah. So this was just literally like a little, I don't even remember, like a little four-piece quadrant that I drew just to remind myself like, hey, this is an area you could be pretty aggressive. If price is here, maybe be a little less aggressive. Here, you want to kind of slow down a little bit here, and here, really caution. This is when we were in this area here. And the point for me is just, when the going is good, sometimes it's easy to think it's going to last forever. And again, just kind of forget what you're doing and forget that the move likely isn't going to last forever, right? So don't be super aggressive when price is really high and really extended. Now we got a bit of a consolidation and obviously it went much further, but I just want to kind of temper my exuberance. And that was for last week, kind of need to remove it and replace it now that we're completely up in the sky all over again. But I think the idea sticks, right? Just be a little careful here, wait for some type of consolidation or pullback, and then you can look to, um, get aggressive again. But the reason I was aggressive in this area was because, again, price went below the previous 2-day low, 2 days of lows and pushed higher. We haven't seen that for a while now. We might not see that for a while. So this is a little bit irrelevant now, but it's still a good reminder, just be a little careful, wait for some kind of either consolidation or price correction before you get really aggressive again. A little marker in time, basically.
Kind of interesting also the breakout where I think people that are looking into price action, that looks a lot like a pin bar that was like kind of confirming the breakout just now. I don't know if you can show it again. Yeah, the one like that is have the opening and closing at the same area. No, like four to
This
the
one.
right. This one, yeah,
Yeah.
exactly. So I remember back then, I mean, that was like 15, 20 years ago. When people, yeah, really, where people started talking a lot about price action. I remember being in a forum. That was a thing back then still. There was no Discord. And people were like only trading these pin bars and exactly only when you saw them confirming a breakout over a resistance or appearing at levels of support, for example. And it's a strategy back then that worked very well. I don't see actually why it shouldn't work here. I mean, this is basically the confirmation. And back then, I like to trade those really with typically stop buy order. So I would have placed a stop buy order just slightly above the top wick of the pin bar, and then you see it would have been executed on the next day. Then you can ride the wave, so to say, up. It's also an instrument where you can kind of discipline yourself, in my opinion, with to not trade necessarily all the trades that appear in what you define as the gray box or the very light green box, where you already say like, I don't know, is this going on? I should be a little bit more cautious there, not be too aggressive, because trends over time, of course, like to flatten out. And I actually, a lot of what you said just now, I find in my own approach also when it comes to trading, because I also see, like, not every time, of course, but very often that like the first signals, for example, down here on euro dollar, so these are 5 pips Renko boxes on euro dollar, that you have the first few signals that actually appear before you have really solid moves to the upside, and then later on the signals get worse and worse because you have this phenomenon of momentum in the market and then the momentum slowly flattening out until it's not existing anymore. And so this is, for example, something I want to do some more research also, like, is the when a new buy signal appears, are the first 3 signals better than the following one, and so on and so forth. Something where you beautifully can, of course, use AI then to help you analyze things like this. But I'm always happy, when I get confirmation from somebody else, like, say, like, oh, I've like kind of noticed this and this pattern very often on the markets, and then without us talking about this prior to the stream, you say like, oh, I have this zones when the momentum is too high, I want to get a little bit more cautious. Doesn't mean you cannot trade them, of course, but maybe it's nothing where you want to risk like 1 or 2%, maybe something like 0.1 or 0.2%. I had somebody, since we are, if you allow me, Deanna, somebody asking, I think it was for FX, or what was his name, about or made a comment for Guru, sorry. Patience pays off. You see the living the living proof of it now. Took me a while to comment on this. Saying euro dollar bearish confirmation. We have a large move in euro dollar, and the dollar as general. Would like to have a little bit a look with a top down analysis on this, because in my opinion we are slowly starting to see a change of market structure. And the way, at least my way, to spot something like this is really a top-down analysis. So I would ideally start at the daily chart, just like Dina told you. Just because you're day trading doesn't mean you cannot start with a daily chart. You'll often get, in my opinion, even better impulses from daily charts than necessarily from 5-minute charts when it comes to scalping. And I will start basically by looking at the grand scheme of things, at like what is the current market structure. And I think it's a bit safe to say that our market structure before was maybe something like this, an extended sideways movement, which changed into more of a bull market now with higher highs and higher lows. So something like this. And then I will go down the time frames. For the next one, I want to select as the 4-hour one and see if that is confirmed. And we can see what I drew just now in my very crude fashion on the daily time frame still passes the test of time also on the 4-hour time frame. So let's continue and go to the 1-hour time frame. And why can I zoom out here? Hello. Now that's weird. I cannot. For whatever reason, it doesn't allow me to scroll anymore, but doesn't really matter. But you can see on the 1-hour time frame, it's pretty much the same. Still holds the test of time. However, if I go all the way down now to the 15-minute time frame, let me reload this chart. This looks absolutely stupid right now. Here we go. That looks a bit nicer. If we go down to the 15-minute time frame, I think we are seeing this break of structure. Before we had the same picture like we had on the higher time frames, higher lows and higher highs to some extent at least. And then something has changed. So the movement we saw this morning, or actually it started this morning, was where we dropped below this last lower high. Well, technically it was already lower high than it was here. So this started actually a little bit earlier on Friday already. But this shows me that at least on the lower time frames, there seems to be a little bit change of market structure. Now, we have to be a little bit careful. This could be, of course, positioning already in anticipation. I mean, positioning by institutional investors in anticipation of the economic data that is released this week. This could be also because we had the trade agreement, I think this weekend, with a 30%, could be a reaction to this. We all know the first reaction to announcement like this is usually the reaction into the wrong direction. So we want to be a little bit careful there. But this is now typically the point where maybe I'm not saying I'm trading this now necessarily, but my go-to plan now would be to, for example, see what happens if we see something like the market later on, if it does. Of course, it doesn't need to do that, pulling back to this last higher low that we had, or lower low it was actually already, and then see, for example, if I can find some price action there, like pin bars that we were talking about just now, or some of the stuff that, for example, Victor is very good in identifying, looking at. That would be like a little bit a go-to strategy for myself. If I say like, oh, I don't have like any fancy indicators, I don't have the time to like build my own trading systems, I'm new to this stuff, I just want to get a feeling first and make sure I don't overtrade, I don't jump into trades. This would be a valid setup for me if we go back up there. So if the market, for example, moves up here again, and then we see something like we saw on Deanna's chart, for example, earlier. So something like this, not very well drawn, like this, like pin bar, for example, exactly at the resistance now. That would be a valid trade for me with a good risk reward ratio, probably of 1.5 to 1 or 2 to 1 even.
Yeah, absolutely. That's funny. That's the same way. I don't trade Forex recently, but same thing. I pay a lot of attention to, especially when trading Forex, market structure shifts or market structure breaks. And for me, you can do something even just as simple as there's a tool that I really like that kind of helps with consistency when you're labeling and looking at, where did price break, but exactly what you said, I would have drawn it exactly the same. And then for me, anywhere in that area could be a potential short. And if price comes back, you could go anywhere in there. And if it kind of sweeps that high and then moves lower, that can be an even higher probability short as well. like you said, it
Absolutely,
is
yeah.
interesting to see like the same ideas in the market. Really is kind of speaks to the fact that there aren't necessarily new ideas, right? We all have
No,
kind of like
that's the thing. I mean, we are talking about prices, about price discovery, so everything can always be broken down in supply and demand.
mhm,
And that is if you have like an overhead of demand or an overhead of supply,
mhm,
which puts the pressure on each side again. The way you do that, if you use indicators, if you use Fibonacci retracement boxes, indicators, whatever, it's always the same, guys. And really, if I could go back in time and share with myself, my younger self, my much younger self, like one concept, it really would have been something like this. Take your time, start with a
mhm,
daily, draw what you see there at the moment, and remember, it's not science, it's more often technical
mhm.
analysis is always a bit of more of a form of art,
Yeah,
which is why it's so hard to like backtest also sometimes,
right.
like somebody told me, for example, well, why don't you like backtest when you draw support and resistance lines? And my answer is always, well, it's very difficult to tell an AI that my definition of support and resistance lines is
Right.
sometimes more of a feeling, if you get what I mean. And this doesn't mean that I want you guys out there to trade on your feelings, but have a little bit of a structured approach. If you look at
Mm,
the new chart, start with a daily, draw what you see there, go down the time frames, maybe until the 15-minute time frames. I necessarily wouldn't look so much at 5 minute and 1 minute in the
mm,
beginning. There's a lot of noise in there. In the 50 minutes, also a lot of noise. But see, like, can you identify, is there somewhere in break of structure? Because
mm,
we have to see that these breaks in structure, of course, also always start at the lower time frames. So these are your chances in a way also to get into trades earlier. If I wait until the structure changes, for example, here on the daily time frame, I of course have to wait much longer. So if I switch back
mhm,
to the daily one for the break of structure really to appear here, I would have to wait until we go below here, which is
mhm,
115.60 or let's say 115.50. So I would potentially miss out already on like 200
mhm.
pips or 230 pips of move here. Like just looking, in my opinion, at least if you're not like have some high frequency 100 trades per day scalping strategy, but just looking at like 5 minutes or 15 minutes or 1 minute charts, I wouldn't do it. That would be
Mhm.
like my tip for the young Dirk who made all those
Yeah.
mistakes and lost a lot of money because of those
Mm.
mistakes.
Yeah, I think I could not agree more. I think the higher the time frame, the more confluence or the more conviction you can have. But a lot of times when you're trading, it's helpful to look at lower time frames as well. I wouldn't go below the 15-minute, especially if you're starting out. And one of the absolute cheat codes of the fivers, which you don't see this on all funding companies, and so really encourage traders to take advantage of this, is the fact that you can hold as long as you want.
Yeah.
There is no day trading rule, and that is that is so advantageous. In fact, that is the reason why when I started trading funding companies, I selected the fivers because the advantage of being able to hold as long as you do is hugely beneficial to you. You do not need to be as precise, and of course, you still can hold. For a day trade, you can still hold for a short time, but you can keep some of your trade on and let it run, or you can structure a strategy around that. So if you're working a full-time job or something where you cannot be at the chart all the time, that is so important to capitalize. And Michael Katz from Trade the Pool has said that when he trades a fivers account, he at some point positions himself in a trade, and then as time goes on, he'll get an alert that says, hey, you just passed a challenge, or something like that. And that's because he's allowing his positions to work. In particular, this works well with the indices and with gold, because they have sort of the an upward bias. A little different in forex, but same thing. If you see a big move set up, you can position and just let it ride. You don't have to get out in any given time. So I just want to go back, and so this commenter here said, who else is a swing trader as well as they are? And again, that is really advantageous about the fivers, that you can swing trade and day trade, do them together, whatever is allowed. But I want to look for, there was a comment about this one here. Okay.
Sorry.
Whoops, did I do it?
Oh. No, I wanted to click the other one away from you. So I think we clicked at the same time.
There we go. Okay, so swing high and swing low. So I'm going to try and draw this out. I'll show you on the chart first, and then maybe I'll try and draw it out. So when you're looking, let's use the daily time frame. When you're looking at the daily time frame in particular, for me, it's enough to find where price has dipped below a swing low. So for example, here, a previous day low. So here price dipped below this previous day low and then closed back up. What a swing low is, though, something like this right here. So the low of this middle candle is lower than the candle before it and the candle after it. So it forms this kind of like V shape, and every swing low is a little bit different, but you can see the low on either side is higher. So that creates a swing low. If price dips below that, that can be a really strong, dips below it and then recovers, like we see here. It came below the previous day low, which was this candle here, dipped below it, but also took out this swing low and then went above. The reason that's important or significant is because a lot of traders will have stops below swing lows here as well. Stops below swing lows. And that liquidity can kind of be a fuel that can launch a trade higher. So all of these stops below this swing low, below this swing low, below this previous day low were taken out, price then reversed and pushed strongly higher. So that's what you're looking at. Same on the swing high. So here is a high. It kind of sticks up. You can see here is the high, and the high here is lower, and the high on the other side is also lower. So this is a swing high. So hopefully that's clear. If not, let me know in the chat. Swing lows are important as well as the previous day and previous low. So that's what I'm paying attention to.
And yeah, this is what you mentioned just now, that a lot of traders have their stops just underneath those trend lines, like the ascending blue one you were drawing there just now. That's actually very true. And there is this notion always out there that a lot of forex brokers, or not just forex brokers, brokers in general, they like to stop hunt you, which is not necessarily true. I worked long years for a forex broker. They didn't stop hunt, but of course I cannot tell for everybody, for every broker out there. But it's just like common sense. There are algorithms, especially in forex out there, that are specifically designed to exploit something like this, because they know, this is a very dominant trend line, for example. Not talking about this one now, but maybe there's like a triple high or something like this, that everybody, that it's like very clear to see, even if you're a beginner. And they will have algorithms then that kind of push the price just over that, get rid of all the stops and then push the price lower again in the direction that originally might have been your trades. So my go-to strategy really over the years have become, I don't really care when I place my stops anymore. Is this like a resistance or support or something like this? For me, it's just a percentage away from my entry. If that coincidence with a resistance or support, well, so be it. If not, then I really don't care anymore. And looking at trade statistics from like 1,000+ trades, it doesn't make difference. Like if I it doesn't affect like in any form my performance negatively, at least to the extent I can see. One more thing I wanted to say, and that fits beautifully in with what Deanna just said, and also with this question here from Adrian. On the fivers, do you have separate accounts for swing and intraday trading with low fees? First of all, low spreads and low fees you have anyway on the fivers. I would go as far as saying, like, when it comes to commission and spreads on 95% of the pairs is amongst the lowest, if not the lowest in the industry, maybe with the exception of something like cryptocurrencies, so Bitcoin, Ethereum. which is not typically something the Fivers audience trades. We're more like in Forex, maybe in indices also. You can have, of course, 2 accounts, and you should maybe have that. I have that too. So I have one account, not really for swing trading and day trading, but I have, for example, one account where I trade gold. I have another account, which is a bootcamp account, where I trade euro dollar and NASDAQ. So that's the separation for me. If you want to separate that by swing trading and intraday trading, which of course makes sense to do that on separate accounts, I very much agree with you there, Adrian, you can do that. The beauty is, like Deanna said, you can hold onto positions for as long as you want. You can also take as much time as you need to pass a challenge. So this is the thing you see, at least from my experience with a lot of other prop trading companies out there, that they only give you limited time, that they say something like, you have to pass this challenge within 30 days. And when I see like something, you have to earn like 6% or 10% in 30 days, that is really difficult to do with proper risk management. Or they restrict you very much on your trading strategies, that they say something like this suddenly, well, if you have a winning position, you cannot add to it anymore, which is like one of my go-to strategies.
Right,
to trade
like,
with the trends and add to the position. It makes totally sense to do that,
Yeah.
But when I read something like this, restrictions like this, I always think like, okay, maybe this is a business model not, that aims towards people becoming successful, passing the challenges, and then trading, letting them trade parts of the company's capital, but more like we want to sell as many accounts as possible.
Yeah. And you can use that to your advantage, right? If you're wondering what is the best way to pass a challenge, a lot of times it can be looking at what are, hopefully this isn't too controversial to say, but look at what are the rules of firms, right? So if there's a consistency rule, if there is a rule that you have to, close by the end of the day, right? Those are ways to kind of that limit your progress. Maybe you want to pay attention to those and say, oh, okay, so consistency rule, that means maybe I should be aiming for some very outs. Now, you don't always have to do this, because I know, Dirk, that's not how your strategy is. And I have also built successful strategies that did not have outsized gains to them, but that's something to think about. Consistency, closing at the end of the day, that tells me, wait a second, okay, that might be really important. And somebody's mentioning high swap rates. I understand what you mean, that a swap rate can feel like a big chunk, right? A big chunk, not necessarily that they're higher with the Fivers than elsewhere, but it can feel like it takes a bite. I think, Dirk, you showed like $5, $6. That could feel like a big bite out of your position. However, if you are entering, let's say it takes you a month to pass the challenge, okay? If you are able to get into a position and hold for an entire month, $5 on your swing trade is not going to feel like anything. It's going to be just an absolute cost of business that is going to be no big deal. Now, if you're day trading only, that is going to be a significant chunk. But again, to incur the swing trade, you have the luxury of time. So really, holding for a bigger gain, and then that swap rate is very meaningless.
I mean, in a nutshell, I have to say, when it comes to the specifics of swap rates for indices, NASDAQ, S&P 500, I have to agree with you, MRiver. They are pretty high. But on the other hand, you do not pay commissions for the trade. So for Euro-Dollar, Forex, for example, for one lot, you pay $4 of commissions, which, by the way, is very low as well. I'm more used to something like $6 to $10 for a round turn, so opening and closing combined. You do not have that on the indices, so no commissions. And if I, put this into the equation, it's okay to charge swap rates like this. Again, I mean, by the end of the day, liquidity costs money. If you trade with leverage, we cannot expect to get all the money for free always. But it's a point. I agree with you. For me, it's okay because I don't pay commissions. Not me personally. In general, you don't pay commissions on trading the indices on the Fivers. But this is, you have to decide, of course. If you say, like, I open a position now, I'm going to hold on to it for 1.5 to 2 months. Well, maybe for that specific asset, then I would choose a different way to trade it.
And Adrian, you asked about if having separate accounts for swing and intraday trading. you can do it whatever is your personal preference. So for me, I keep them in one account, but you can do it if it's easier for you to like mentally account for your different trades. You can have them in separate accounts, or you can do them together, however you want it to be. So it's up to your own design. And Dirk, I just wanted to clarify something that you had said. You were talking about your stops and your success using those stops over thousands of trades or 1,000 trades.
Yeah.
What you're saying is, clarify if I'm incorrect. You're saying that instead of having a stop set at, like, for example, a low or below a swing or something, you're saying I'm going to give this trade 10 points of risk in order to take 20 points of gain or something like that.
Yeah.
And so it has nothing to do with the technical action. It's just the math playing out.
Exactly.
That's underrated.
Yeah.
That's an underrated strategy,
and,
I think.
And it works so beautifully, you know. It's the beauty of simplicity, because you basically you are stepping 2 steps there. You don't need to. Let me quickly switch back to my screen so I can show you guys more what I mean. So let's go back to that euro dollar trade on the 15-minute. So let's say we go up here today, and I decide I want to take at this point, at this crude drawing of a pin bar I saw there, I want to trade a short trade. So I have 2 ways now. Normally I would maybe go about and say, well, where was the last time where we had some kind of resistance or support? Maybe that was this area here. So I want to put my stop maybe here. And then calculate like, well, I want a 1.5 risk to reward. Where do I need to put my take profit? Well, probably would be somewhere down here. Then again, look like into the chart. Oh, does it make sense to put this one here? Oh no, it's below an area of support. So price is likely going to bounce there, like we see actually at the moment. Then in the next step, I need to calculate like what would be for my risk of, let's say, 0.2%, the position size I can calculate for this. I don't need to do that anymore at all, because I have my fixed take profit on euro dollar, not for this specific trade, but for the charting I was showing you earlier. Where is it? So this one here, for example, for this trade up here this early morning, which I didn't take because I haven't automated yet, I would set a 15 pips take profit and a 5 pip stop loss, 3-to-1 risk reward ratio. I don't care if there are resistance, supports. I don't care, because I know this signal with this risk setup has a 52% success rate, and with a 3-to-1 risk reward ratio. So I have above 50%, which already would make me money with a 1-to-1 risk reward. But thanks to the 3-to-1 risk reward ratio, I could go down all the way to what is that, like 33%, and still not lose money. So that's the beauty of not focusing, in my opinion, too much on, when you design a trading strategy, on, you know, how are my entries? How do I take support and resistance and everything into account? And I'm not saying you cannot do that, but for me, something like this works better. And this is back-tested on hard data. This is not like modifying like the rules of entry. Those are fixed. This is just testing, well, which risk-reward ratio earns me the best risk-adjusted returns. Risk-adjusted returns means like, where do I have the lowest drawdown in comparison to the amount I can earn with this per year. Still doesn't guarantee that you make money, of course, but it's a much simpler approach. Like I told you this morning in gold, I had a trade on Friday, 2-to-1 risk-reward ratio, which earned me $100. This morning, the first trade was a loser, but it lost only $50. And it's, at least for me, I mean, different people have different approaches to this. For me, it's very comforting always to know, like, when I have one winner trade, I can lose the next 2-1, and I still haven't lost money net. I'm just back to square one there. I think that's very cool. I get that it's like a bit boring, or probably somebody would call me boomer for this, you know. But by the end of the day, you know what earns money and works should be something we take.
That's right.
By the way,
That's
guys,
right.
leave us please a like if you're watching this on YouTube. We have reached already 80,000 subscribers. Remember, just 2 weeks ago, we celebrated 75,000 subscribers. I'm very sure if we approach like 85 or 90,000, for sure 100,000, we're going to have some very, very nice grand giveaways again for you. So leave a like, comment on the video, subscribe to bring out the message to other people out there that might be interested in unbiased and real trading and transparent trading, especially, and not just share the stories on social media you see with guys and ladies running or driving around in Lamborghinis, living somewhere in a high rise in Dubai. Guys, the real life of a trader is much more mundane. Like Deanna getting up at, what was it, 2:30, 3:30 in the morning to trade London. And
what can I say? Besides, we have kids and they cost the same as a supercar for the most part, right?
Yeah, absolutely. Actually, I don't even own a car. I was thinking, like the other day, I talked to my wife, said like, should we get a car again? It's more convenient sometimes for grocery shopping, or if we want to go on a weekend somewhere, we don't need to rent a car anymore. But then for me, it's like, am I going to pay like 70,000 on a car now just to know that 1 year in the future is going to be worth only half of that? Like for me, I really think as a trader, investor, this is like the best, the worst risk adjusted return you can have on any asset. So I always come back to, I don't know, I'm just going to continue using my bicycle. Anyway, it's healthier for me.
Right. And, at least in the US, it's getting really popular. A lot of people I'm starting to see this. This is a very European thing, I think. But people riding bikes, or like not quite mopeds, but something like that. And it just, my kids are so into that kind of thing. They're too young to have a license yet, but it's so smart. It's so expensive to have a car. And if you can get around, we can't necessarily bicycle, like regular bicycle to anywhere, but I'm starting to see adults in the US that are switching to electric bikes, even electric scooters. Do you have electric scooters where you are? Do people ride those? Like the stand-up scooters?
Yeah, we have a lot of those scooters, rental companies for those. So they're a bit of annoyance because they stand around everywhere, because people just park them wherever, and then I come there with my bike and suddenly, oh, there's a scooter, and a lot of electric bikes, which I like. I don't have an electric bike because I want more of the workout also from it. And but you see a lot of, especially elderly people, who like to ride those electric bikes, which makes sense, which sometimes can be dangerous also, because you're like bicycling when you have grandma passing you with 30 miles per hour suddenly. But I get the fun of it, really. Like a friend of mine who does like extended bicycle tours every year, like for 1 or 2 weeks, he says this is really nice with an electric bike, because you can cover like 80 miles per day and you still don't feel dead in the evening. You still have energy.
And now they have like, I don't know what they're called, but boosted electric bikes.
Oh God,
so,
what is that?
so basically I went on a tour with my son, and it was like a regular bicycle, and then you were able to like turn the power on at some point. So if you wanted a little extra help, if you were going a really long distance or something like that, or big hills or whatever, it would kind of, help you out a little bit. So you kind of had a mix of, both. So that's
nice as well.
Cool
You can choose, like, do I want the workout, or maybe I don't want to climb this large long hill there.
Right. Depends on where you live, right, and how far you need to go. Here's a question for you, Dirk. I'm happy to answer it too. Well, you go ahead and answer that, and then
you wanted to click on the same one. Well,
it was the one above it that I was going to click on. So let's do that one next.
I'm, as you can hear by my very heavy accent, I'm from Germany. I live in Berlin.
Cool. So there's a lot of biking there, probably.
There's a lot of biking. Luckily, not so many hills, though.
Oh, that's good. That's good. I've never been to Germany. I would love to go sometime.
Be my guest. Come to Berlin. It's a special town.
Yeah.
I'm not going to say it's a beautiful town. It is, but it's a special town.
There's some beautiful things there for sure. I don't know as much about Berlin as maybe I should, but. All right, Dirk, this is a hard question for me. I never know exactly how to answer this. A lot of people can answer it. Like, I know your answer is a lot more interesting than mine, but I'll just say in a nutshell, mine is, I never really know what to say here and be honest, because it wasn't, a lot of people will say, oh, I've been trading for 3 years or 4 years or whatever. I started getting interested back in 2009, but I was very much a hobby for me for a very long time. So it was progressive, but I didn't really start trading, and especially did not start day trading until closer to around 2021, and then got very serious about it a couple years later. So I don't know what the right actual answer is, to be most honest, but I started getting interested in it a long time ago, and then sort of working my way up. But your answer is a lot more interesting. So why don't you tell us how long you've been
Oh
trading?
God, is it really that much more interesting? Well,
I think so. I think
if I
it's pretty cool.
if I say now, well, I've been trading or in the financial markets for 26 years, yeah, maybe that sounds interesting, but it's also always on off, because I started in banking. I became a stockbroker then, so was day trading stocks. But for a long time, I also went away from this typical day trading that we see now, because my primary investments have been for a very long time now long-term investments. So for 90% of my assets, those are fixed for 3 to 5 years in my strategies. I became a full-time self-sufficient, so to say, trader and investor in 2019. So that's 5 years ago now. Before that, of course, also a lot of trading, like family offices, FX options, where we had a large portfolio of almost 2.5 billion euros in FX options that we were trading. But in 2019, I had the choice, am I going to look now for a new job, or am I just going to jump into the water and say I'm sick of earning money for other people? Because I had those discussions in the past. I remember very well when I lived in Singapore, I had a very good year trading FX options for the guy that employed me back then. And, I was full of confidence going into salary negotiations, bonus negotiations, and told him, well, I made $1.5 million for you last year. In my mind, already think oh, maybe I'm going to get a nice bonus of 300,000. And I ended up getting no bonus because I made 1.5 million for him, but he, with his own trading, managed to lose 10 million that year.
Oh my
And
goodness.
then, of course, you said, we have not been so successful. And I was thinking, no, you have not been. I have
not been so
successful.
successful.
And this is really, for me, was the first time where I said, at one point, I want to do that for my own. Of course, I don't have that much money that I can say at the moment I'm earning millions of dollars every year. I have a good income most of the time through it. But the freedom attached to it is worth not always knowing how much am I going to earn next month with my trading. That's a good and very positive trade-off for me. The short-term trading we are very often talking about here, of course, I've done that also, but before starting live streaming here with the Fivers, I hadn't done that, honestly speaking, in a while, especially on an asset like gold. I was more doing that in cryptocurrencies. I'm also still more doing that in cryptocurrencies. So 3 months ago, when you guys told me, Dirk, you have to trade gold now on these live streams, not the audience, not the Fivers told me that. The audience decided I have to do that. That was a challenge because I thought okay, that's interesting. I'm basically starting where a lot of people in the audience are probably also starting out, at square one. How do I approach this asset? How do I develop my trading strategies? And I had my up and downs until last week. I passed the first evaluation phase for that high stakes account I'm using. But it was also a journey there. Maybe for me, the journey is more compressed because I kind of know what awaits me also on the emotional, on the psychological level. But in a nutshell, I can now very much relate also better again to beginners, getting frustrated or asking the questions that I'm very thankful for that you guys ask them in this chat. That was a long monologue, sorry.
That's a great. I love hearing your story because, it just goes to show how much wisdom you have and how much experience you have, and
Don't call
that's
it
hard to
wisdom,
come by.
please.
I know it makes you feel old, doesn't it? But
it makes you
it
feel
is.
not that, but if I look at people for example, I especially always have to highlight, for example, Victor there. I also have to highlight LJ, who are the much better day traders than I probably ever will be. For me, it's always amazing the approach, for example, that Victor has. this data-driven approach, the absolute insane discipline he brings with his trades. And then on the other side, you have somebody like LJ who has like this, who does like these amazing things, and then he's always about it like, oh well, like, this is like, wow, this is insane what you're doing there, man.
Absolutely. And one of the things I know Victor's trading style a little bit better than I know LJ's, but Victor has such a consistency that he brings to the market day in and day out, and that is just so hard to achieve, especially for traders when they're just starting out, but is so incredibly impressive. I mean, he says the same the same thing over and over and over again, and he's so patient to explain it again and again. But I think it just that level of consistency is so important as a trader. And I think LJ also is very consistent in a much harder to identify way for us listening. But I think his process is also very consistent for him in, he can keep track of that in a really good way. But LJ, I loved seeing his statistics back. I guess it was a couple months ago now, where he shared a challenge that he had passed, and it was like so clean and so beautiful. I wish I had saved a screenshot of that. But if I'm remembering correctly, he actually started in drawdown, but started in drawdown and never wavered. He never wavered. He started in drawdown and then slowly, not slowly, it took him, I think, less than 24 hours, but, trade by trade made his way back up. And that is so hard to do and so impressive, because like you said, your psychology around it is what kind of messes with us a lot of times, especially when we start a new account in drawdown.
Yeah, that's hard, but I honestly speaking, always have that too. Like when I started a new account, I was thinking like, oh yeah, come on, the first 2 trades, maybe let them be good trades, to get you away. But of course they are not.
Right.
Almost always start at a drawdown.
They're always losers. Why is that?
I don't know. I don't know. It's really like this. But it's really also where like a trading pro differentiates him or herself from a beginner. As a beginner, and I've been there many times, you very quickly, after you see like 2, 3, 4 trades lost in a row, you get into this mindset of, is my strategy still working? Should I do something else? Oh, if I just had modified this last trade in this bit, it still would have been a winner. I should go. And as a pro, you learn to just accept the process. You learn to accept, because maybe you've backtested your strategy and seen that it's profitable over 500 or 1,000 trades. Right. And if you look at the individual trades, you see like, oh yeah, there are periods of time, like for my gold trading strategy, where I have like 10 trades in a row that are losers. But I know over 500 trades, they won't really matter. If I wouldn't have this data on 500 trades, of course, I would start to doubt myself at this point and think like, oh, maybe it's not working anymore.
Absolutely. Now, Dirk, when you are doing your account now, I know that you're using a fixed stop loss and a fixed take profit. Are you ever, or have you so far, or will you in the future change your position size, or is your position size always fixed?
My position size changes because it's always a fixed percentage loss of the account balance. So of course, if I'm trading now with a step 1 evaluation account at a 100K, it's going to be $200 versus the return to. If that scales up to 150,000, we're at $300. So the position size dynamically scales up. And I was thinking long and hard about, for example, on this specific bootcamp account, for a euro-dollar trading strategy that I want to implement there later today, also to trade with something like 0.4 or 0.5% stop. But when I analyzed the drawdown curves, there were some instances where I had a drawdown of 6 or 7%, which would put me, if you're later at the funded level for bootcamp, you have a max drawdown of 4%. So I could potentially, it doesn't mean it needs to do that, but the potential is there based on the historic data that at one point I could be in a drawdown of 5 or 6%, which would mean if it happens at the beginning, I would basically lose the account then. So I rather trade this with 0.2% because the highest historic drawdown was there at 2.56%, which still gives me a nice error margin, for slippage and all the things that are difficult to account to.
Yeah. And then you have the luxury of increasing as time goes on.
Exactly, yeah.
And
but that's the beauty of
scaling up.
compounding also, you might think like, oh, it's so slow in the beginning, not much happening. Yeah, which might be true, but things then later. I mean, if you want to get a funding account, probably your goal is not to stop there. Your goal is not to stop at like a 100K account or 250 account that you live trade and earn money with for the fivers, and for yourself, obviously, primarily. You probably have the aim, hey, I want to get like a 1 million or 2 million or to the max, a 4 million funded account, because this is where the real money is. And if you calculate like, well, okay, 0.2% on a 1 million account, we're talking about 2K already. US dollars, if you think like, oh, risking 0.5%, that's 5K. That's already has a bit of a different notion when you have those phases of 4 or 5 trades losing in a row. It's going to make you a little bit nervous when already thinking like, I just lost 50K,
Yeah. And, we had joked about like your first trade or your first and second trade are always losers in a new account. And that's actually not true. It just feels like that, right? Because those are what stick in our head. So we don't remember the accounts where your first 2 trades were winners, but you really remember the accounts where the first 2 were losers. But when you're starting out, like you said, with really low risk, that gives you the luxury of like, I always think of this as like an airplane taking off, right? There's this like gradual ascent that happens, and that little dip that can happen, the smallest you can make that, the better, right? So you could definitely dip down to like, 3.5% and then take off, but you have to recover that drawdown. So if you can keep it really shallow and then start the lift off and then start to accelerate as you're, up in the air, that can be a really great way to do it. So in the beginning, keep it slow, make it easy on yourself, and then you can accelerate. It seems in the beginning like this is going to take forever, but the reality is, and I'm notorious for this, just, push the accelerator right away, and then you find yourself in bigger drawdowns. So going in slow and then increasing is a great way to scale your account for sure.
Because I mean, that's the sad thing, no? It's like the contrast between what we are trying to tell you, how it's really, to be a trader, how it's really to have a proper risk management, and then the things you hear on social media, of people saying, oh, I turned $500 into $100,000 last month. I'm not saying that it's not possible, but it's like 1 in 1 million. I personally have never ever met somebody who did this, by the way, and I've seen thousands of traders, really thousands of traders, and those who are long-term profitable. First of all, they are usually very humble beings. They are not the ones, flashing big sport cars and living the fancy Instagram lifestyle. They're very humble because they sit like 14, 15 hours in the office, staring at their screens, optimizing things, working because they have a love for the process, not necessarily in the first place, for the money they make from that, although that's a nice thing, of course, as well. And they have very predictable outcomes for the risk they take. So usually you'll see like from here to here, no, from here to here, like a
there you go.
Like this.
That's right.
No, like
this. No, other way. There you go.
Very smooth, going up. Oh God, the German doing like this, my God. And pardon me, that was a bad joke. And so very, very, without many drawdowns and jumps to the upside, very smooth rising equity curves. Like if you have something like this and you have like data like of a year or 2 of trading, and you can show a professional investor, I was able to do that, they'll draw all over you. You're basically guaranteed to get easy money with it that you can trade with. That's the way to go, when you don't sit on by yourself already in $500,000 or $1 million to trade with. And I mean, let's be honest, probably most people are not, not everybody's born with a golden spoon in their mouth, obviously. And I want to very quickly here, that's a very good question from King RO Gaming. Is 500 trades a sufficient sample size for backtesting a strategy, or should one aim for 1,000 trades before trading it live? So general rule of thumb is the more the merrier. Of course, it's always better to have more data. 500, in my opinion, already gives you a good overview, because usually that covers like a lot of market phases. I would be careful here with one exception. For example, if you're trading cryptocurrencies, the market structure has changed a lot. So if you look at data, for example, from 2010 or 2011, 13, where you had those really crazy intraday moves of several 100%, that are not going to probably be beneficial for if you mix them up with like the data we see nowadays in Bitcoin, where we have more normal moves of 0.5% or percent or something. So there can be a trade-off. If you're trading assets that are very established, like gold, like euro dollar, it's always good to have more data. If you are a premium member of TradingView, for example, and you download, I think, 15 minutes, you can go quite a way back. That should be already, if not sufficient, at least give you a first indication of, is this going to be profitable or not, what I'm aiming at here. Dina, you have fans here.
Oh, yeah. Well, thank you very much. Yeah, and the thing is, to me, I think it's important. Backtesting, some people are really about backtesting. For me, I think that one of the best things you can do is take as many trades as possible, so that you can really get used to what it's like, what the emotion is. And obviously, you can do that with taking trades in your funding account. But another really good way to do it is TradingView. So if you have a TradingView account, you have the luxury of using their paper trading, and it's free. So if you have that, you can test your trade, forward test it in real time. I think that's even more important. And obviously, we've been talking about like the higher time frames give you sort of like a stronger read on what's going on, but you can do a replay as well. So if you look on the bottom here, there's replay trading, so you can go back, and that's not I guess exactly the same as what am I trying to say here? This is what I would do. You can connect here, paper trading, and you can set up an account to have whatever account size you want and practice. I think that is the best thing you can do, even more valuable than backtesting. I'm kind of a fan of not backtesting per se, just because when you backtest, it's so easy to sort of like overfit your strategy, right? And so really doing it, forward testing, to me, I think is even more beneficial. So utilize TradingView for that. Or, if it's available to you, I've done it in funding accounts, where I've taken funding accounts knowing that I'm probably going to lose the challenge. That wasn't the point, but it was really to test the strategy, take as many trades as I wanted to take to really learn and understand how the market works. So there's, I think you're in the right idea, thinking about hundreds of trades, thousands of trades. That's what you're really, really looking for sure.
And it makes you also more confident in your strategy. If you see like, wow, on the backtest, maybe this doesn't make me a millionaire overnight, but it works. It consistently makes money. It beats the markets. I know we talked last time about this. A trading strategy should beat a buy and hold strategy always. So if you're trading the S&P 500, you want to earn more than the average historic 8% per year that buy and hold gives you on the S&P 500 in a good way. So earning 10% but having a drawdown of 30% is not a good way. And like one thing also to keep in your mind is always there will be a difference between what you backtest or what you demo traded and reality. There always is. The key is like how big is this margin going to be? So you want to make the backtest for your trading system also as hard as possible. Tell it something like, well, if you simulate my trades, in reality, they cost me $4 commission, but you know what? Calculate $6 commission. The usual spread is, let's say, 1 pip. Or, go with 3 pips, just to take into account like that you often will have worse executions on your trades than your backtest probably told you. This is how you can slowly approach a more realistic picture if your trading strategy is successful or not. Deanna, would you excuse me for 5 minutes very quickly? I need to
Yeah,
lock the
absolutely.
door and leave the mailman in very quickly. I'll be back right away.
Okay. Sounds good. And actually, as he was chatting, I just wanted to look at gold for a minute here. So we have been talking a lot about previous day high and low. So let's go through this. This is the gold chart and kind of zoom out a little bit. And this is what gold looks like. Now, gold is one of my favorite assets to trade because when gold tends to do is trend, right? So if you're a trend follower, gold can be a really good asset. When it goes up, it tends to continue to go up. Now, that's not always the case, right? You get some of this sloppy action, but even to the downside, gold started to go down and it continued to go down until it started to go up and continued to go up. Since about April, though, price has been just so messy and so nasty. Now, this candle here is all-time high. So you can see price kind of was nice and orderly and then had this massive, ugly down move and a huge spike to the upside. Basically, you might call this a parabolic move to the upside, and then fell back from there. So everything looks kind of normal, and then attempted to all-time highs again and failed. Attempted again and failed. Started to look pretty, like it was making a move again, made it just below this swing high and then failed again. So as time was going on, I don't really trade patterns like cups or cup with handle, but if you are familiar with traditional trading patterns, this was something that we kind of said, boy, this is starting to look like a cup. And then as time went on, we said, oh, look at that. It looks like price is starting to form this handle. This is where the breakout from the cup and handle would be. Now, I don't trade cups with handles, but I can't help but see it when it happens. And we basically got a perfect cup with handles so far. But that aside, we've been talking about what happens when price takes out a previous day low and pushes higher. And in this case, not only did it move below this previous day low here, this is the previous day low. Not only did it move below this previous day low and then is now pushing higher, but it also took out the swing low right here and pushed higher. Didn't quite make it to this swing low. To me, this is a really high probability trade in gold that is still active. So what I want to see is price at a minimum take out the previous day low and push higher. And then on this trade, we got a bonus, took out the previous day low and the swing low. So in this area here, once price starts to reside kind of in this area, this is where I'm interested in getting long. And we're starting to see that. Now, it's important to take trades. I shouldn't say important. The way I do it is I tend to take off at least part, typically most of the position early on, lock in some of those gains, pay for the trade, and then you can leave, like a small percentage, 10 to 25% runner to see if price will continue. And this is a very high probability setup that I am always on the lookout for. We see a similar thing, and we talked earlier about the same thing in the S&P. We saw that here, where price took out the previous day low and a swing low. Actually, it was on this candle, but then this was a weekend, Friday into a Monday. But we also saw it on the daily chart right here. So price took out the previous day low and a swing low, also this swing low as well, and then launched higher. So these are the type of high probability setups that I'm typically on, looking for. And we're seeing that exact thing right now in gold. So not a guarantee that price is going to, push up to all-time highs or even, take out any of these swings, but this is a high probability setup. If you think of like the stops that were below here, and below here is sort of like the fire, like the kindling or whatever that can launch a rocket ship higher. That's exactly what we're seeing here. So gold could be a pretty decent setup right now. Of course, this is the daily time frame. So if we drop down, let's look at the 4-hour first, you can see the same thing a little bit more zoomed in. This is the open, the weekly open. Price dipped below there up a good bit, sucked up that liquidity, and is pushing higher. So to me, this is still an area where I would be interested, where I am interested in getting long in gold. Again, to take profit pretty quickly and then let part of it run. But you can also do something like Dirk talked about, where you just have a fixed, whatever you use for gold, where you have a fixed stop. I wouldn't be upset to see a trade that looks something like this, where, depending on what you want to risk, 6 points, 7 points in gold is pretty decent. I would take off a good chunk of it pretty early on and then let a runner go, something like that. All right, Dirk, you're back.
I'm back. Was that the cup and handle we were talking about last week?
Yeah,
I think we are somewhere in the area now that you were actually mentioning last week, no? Where you said, like, I think this could be interesting.
It's the same lineup here. So we've got a ways to go still if you're looking at a cup with handle. But for me, I'm not going to wait all that way. This is a really high probability setup. Doesn't mean it's gonna go to profit, but this is a really nice high probability setup where we took out the previous day low and a swing low, and then are pushing above in this area here. So
could make sense anyway. I'm seeing right now indices are starting to come down a little bit again. So we might see gold, pushing higher a bit again later today, which would be very typical also of the structure we've seen many times over the last weeks.
Yeah, Dirk, do you have any I've been wondering about this, and I don't know what the answer is, but I wonder if you have any sense. Typically, we see gold and the indices move inversely to each other.
Yeah.
So when the indices goes up, gold goes down, and vice versa. Like you just mentioned, gold is moving up, indices moving down. But it seems like, I don't know if it's a summer thing or how long it's been happening, but it seems like we haven't been seeing that same level of inverse correlation recently.
The correlation definitely has weakened. So if you look at like longer term data, especially since Trump was elected, that has become much more predominant. The classical risk off, I'm going to buy gold, risk on, I'm going to sell gold and buy indices has come off. I can see it on intraday level still. So if I quickly, what do I click here? This one, switch back to my, maybe let's on this one. That's why I said, so we are seeing right now, for example, the S&P, the NASDAQ up here coming a bit down, the S&P 500 coming a bit down. That's why I said would be typical to see gold move a bit higher now, maybe to 60, 70, 80, something like this. So on a very short time frame, I think this still holds true to some extent. If we look at longer periods of time, so if you look at this on a weekly, maybe even monthly level, it's not true anymore. I think that's due to we are in a weird situation where we still have a lot of liquidity that needs to be invested in the market. But at the same time, a lot of people, institutional investors, are feeling, I need to have something that makes me feel more secure as well. So they are buying stocks that because they have to. If you are like a pension fund manager, a mutual fund manager that is supposed to invest in stocks, of course you have to buy stocks, and you cannot by the end of the year show your investors, well, I only invested 40% in stocks and the rest was cash and I missed out on 35% performance in the NASDAQ. But at the same time, I think they are starting to mix in, or they have already done this for a while, investments like gold. Because usually the US dollar always was the safe haven asset. Now under Trump, I don't think that many people believe it anymore. Also the reason why we've seen the stellar performance of the Swiss franc, for example, as an alternative to the US dollar. This is and gold also. I mean, we are usually looking at gold denominated in US dollar. With a weaker US dollar that we are seeing for a couple of months now, and demand for gold, of course, this is going to price gold price measured in US dollar also higher. So it's a bit of a weird situation. We saw that, for example, also because I'm a big fan of correlations. That's why I love to talk about this. And I did like a study on the correlation of Bitcoin to the M2 money supply. And it was kind of funny because normally they move like 0.87 in unison. So for every unit that the M2 money supply goes up, Bitcoin will go up by 87% of that, basically. So a very high correlation. That doesn't mean you can forecast Bitcoin with the M2 money supply. By the way, correlation is not causation always. But in the beginning of the year, this correlation flipped to minus 5%, minus 0.5, not percent, minus 0.5 suddenly. For the first time we had seen since 2009, since the exception of Bitcoin. And that was a bit the Trump effect, because under Trump and with all the emotional things he likes to tweet, with all this change of mind that is taking place, and all the, I mean, let's say it, craziness that sometimes comes out of his fingers or his mouth. This is not something people will like, and this kind of toppled the market. Everybody was like, oh God, what am I going to invest in? What am I going to invest in now? But I think that has calmed down a bit now as well again.
Yeah, it seems like he's chilled out a little bit. So, but it can be good for the market too, right?
As much as you can say chill out about Donald Trump, no?
Yeah, that's true. That's true. You never know when he's going to throw in a surprise. But it does seem like he's been a little bit less active on Twitter lately, and a little bit less.
He was more focused on getting Stephen Colbert fired. Yeah.
Did you see the Powell thing, the recent Powell, where they're like in like, it looks like a parking garage or some building that they're in, and him and Powell are kind of live having an argument, and it's absolutely hilarious. Right, exactly. He cracks me up. I think it's hilarious.
I mean, you have to think about Jerome Powell was appointed by Donald Trump during his first term, and I'm a big fan of Jerome Powell. I think the US Fed has done a tremendous job since the inflation was high to really maintain their core mandate, which is getting inflation down to 2%. I think they've done this very, very well. And everything that's happening around them, I mean, how many people would have broken under the pressure now of a US president saying, we need the interest rates down now, and openly saying, we want to find something that we have a reason to fire you, Jerome.
Right.
And so in many sense, I wouldn't want to change his job. I think he's one of the most underpaid people in the world. But
that's not true.
He's not.
Mothers are the most underpaid.
Yeah, of course. Let's say in the financial
Jerome Powell has it easy compared to that.
In the financial realm, yeah.
Right. Maybe so.
That is
maybe
true.
So. I don't think he has it all that bad. I don't maybe give him quite as much credit as you, though.
Yeah, but I mean, what I think he has like a salary of $200,000 or something per year. Of course, once you are off your job, like we saw with Janet Yellen before, and Alan Greenspan. You have, of course, you go somewhere to university, hold speeches, and say like, "Oh, that's $20K, please."
Right, exactly.
Half hour.
No sympathy here. I have no sympathy whatsoever. He's doing just fine. He has information that none of us have. I'm sure his portfolio will be spectacular by the time he's done. So, anyway.
And if not, he can give Nancy Pelosi some money. Right, she will quickly double it.
Yeah. All right. So here's a good question. Will gold and USD surprise us this week? Great question. We have a huge calendar for the week. The Forex Factory calendar is not up there, but maybe I can share it. All kinds of red folder events. Nothing today, but every day for the rest of the week, there are at least one, if not multiple, high-impact news events, including JOLTS, tends to be a volatility injection, but also FOMC on Wednesday. core PCE, and then non-farm payroll on Friday. So I have no idea, as does no one else, what the market is going to do or isn't going to do. But if something were going to happen, this, you can likely say that there will be some degree of volatility in the indices and, possibly gold as well. I think looking at the S&P, this was a huge move up. Um, the question is price going to sustain that? Or are we going to get some type of correction, which would be, you know, could be a really good thing. If we get a big pullback, then maybe we can start the next leg higher, but we might not get that. We have no idea. And as far as gold goes, same thing. This is a pretty bullish move here. I like this move. But we have no idea what's going to happen. I try not to predict or have ideas of what's going to happen, just trade what I see, and that tends to work pretty well. So you're very likely correct that there will be something, some type of volatility in the market this week, but who knows? So will it surprise us? Probably, but I have no idea what the surprise will actually be. What about you, Dirk? What are your thoughts?
Sorry, I had to find my correct window again to activate my microphone. Yeah, I was just looking actually at stock seasonality, because as far as I remember, like historically speaking, July is a very positive month for the US stock markets. I think August actually also still good, but then September is a classic month where we see decline. So the playbook might be, I mean, it's such a guess always, I don't like to say like, oh, I'm expecting the non-farm payrolls to come in higher or lower. What I see for the non-farm payrolls right now, the expectation 102K. That might be a little bit on the low end, but as always, the release we are seeing tomorrow, the JOLTS job openings, they are going to give us a pretty good indication already what to expect from the non-farm payrolls. There's a good correlation between those two. So you might want to look at those. And LJ and we've discussed about this also many times in our podcast every 2 weeks on ABL. Like the 102 or 100,000 job growth month per month, it's kind of a baseline, in my opinion, at least in our opinion, I can say, for the USA. So this is like the natural growth of new jobs generated. Which you could argue gives you like an indication also already that maybe the economy is not doing that super great if just the baseline is hit. But what it does is that the likelihood of a surprise to the upside is higher than a surprise to the downside, in my opinion. And I'm sure many of you out there are going to quote me on Friday on this when the actual number comes in at like 75,000, so lower than expected. But for me, as a long-term investor, this week is going to be essential really to judge like on what trajectory. English is such an unphonetical language sometimes. What way is the US economy heading? And are we maybe seeing like first implications already of tariffs? Most likely not. I expect that more for Q4 2025 or Q1 2026. But yeah, I mean, in a nutshell, the market is going to react to it in a volatile way. So if you are day trading out there, don't bet on the outcome of a news. Like, is it going to be better or worse than expected? Look what the market is doing after this. Because many times, I know Jonatan talked about this many times and showed very good examples of this, is that we see the reaction to the market up to the ATRs, for example, and then suddenly we see a turnaround. So the first reaction being the one that is actually not going to continue. For whatever reason. I still haven't found out after 26 years. But funny. I mean, you said it basically in a nutshell. You bring it to the point. Trade what you see,
Yeah. And this can be, a lot of times in some accounts, what I tend to do is position the first the first 2 weeks of the month position, because there are so many volatility events, so many news events, and you can use that to your advantage. Even though there's a restriction in the high stakes account, around high impact news events, that only is 2 minutes before and after. So that's opening new trades, but you can definitely use those events to, position yourself in trades if you want, or position before that if you see a setup that fits with what you're trying to do. And you can get a lot of volatility the first 2 weeks of the month. And that can be really beneficial because we need the market to move in order to make money.
Exactly. Yeah.
Or at least I do. Maybe there's some systems that don't require that, but.
Well, I think all of us, if you're more short-term trading, we like volatility up to a certain point. I remember earlier somebody was, for example, asking about my opinion on Fartcoin, which I don't have an opinion. If you, but like
Is that
talking
a real
about,
thing? I saw
it's a
that,
real
but I didn't
thing.
know if.
Like you have like this is like the thing with cycle, weird sounding meme coins that then make 1,000,000%, but in 99.99% of the time are rug pulled immediately. So guys, I'm not trading something like this. I trade cryptocurrencies, but I tend to trade only top 10 liquidity cryptocurrencies, first of all, because they usually move in one direction, with the exception of Bitcoin. For long-term investments, it's Bitcoin only for me. I don't even touch Ethereum because I think eventually every altcoin will go to zero when compared to Bitcoin. We see that very prominently with, for example, let me look here when we look at the comparison between Bitcoin and Ethereum. Yeah, I know you guys are going to say now, I get this, like, oh, see, it's altcoin season. It's like, it's going up. Ethereum is growing more than Bitcoin at the moment. Whoa, we have to go long. But if you zoom out and look at the long picture, you can see that since September 2022, we've been.
You're on my chart still, Dirk.
Oh, I'm
sorry to
so
interrupt.
sorry. Yeah, thank you. That is.
Maybe I can actually do it.
A valid interruption.
I don't.
Wait, I'm going to switch over now.
There we can see you now.
Here we go. So yeah, this is the chart I wanted to see, and so the overall trend, if you measure Bitcoin versus Ethereum, is that since 2022, you've paid less and less Bitcoin to Ethereum because Bitcoin has grown more than Ethereum. If you compare the performance of both of them over the last 4 years, Bitcoin has gone up by, I think, like 250%. Ethereum has gone up by 40%. And that's the thing about investing in altcoins. It's people are so passionate once they invest like in a project like Solana or, for what it's worth, Fartcoin, and they get like so emotionally attached to it, which is the worst thing you can do as a trader, to get emotionally attached to this, because you want to be right. Let the data speak for yourself. And yes, I agree. I mean, that had to happen sooner or later, that we see a breakout and that we see Ethereum performing stronger again than Bitcoin. But in the grand scheme of things, if I show you a chart like this, would it drive you to invest in Ethereum or in Bitcoin? For me, the answer is clear there. And no, to answer this question, no, Bitcoin will never go to zero.
Can you explain that? Explain your. I actually saw over the weekend Peter Brandt, a famous futures trader. He was in the market. I think he was Unknown Market Wizards, the Jack Schwager book, and he said very same as what you're saying, is like all the other meme coins mean nothing. Bitcoin is the coin, and that's it. Can you explain a little bit about your confidence that Bitcoin will never go to zero, why that is, and kind of maybe for new traders, do you recommend that they stick to trading this in a funding account, or how do you suggest that traders get started trading crypto?
Well, first of all, on the 5 years, you don't trade Bitcoin. Bitcoin for me is always a long-term asset. So the go-to strategy is to invest a little bit every month. DCA yourself in. You don't need to care about market cycles then, and so on and so forth. If you invest a lump sum, chances are very high that you do that at the worst possible time. As we've seen over and over again, the FOMO always starts, when Bitcoin last cycle was at 69,000. This time when it's, I don't know, where it's going to end up. If I believe the models that I usually look at somewhere north of 200,000 maybe, or around 200,000 until January 2026. And for me, there are two compelling cases for Bitcoin. The first one is it's the only super large decentralized network in the world. So the hashing power that is in the Bitcoin network is almost impossible to crack. If you want to crack the Bitcoin network, you would need to own 51% of the hashing power. And I've calculated this. If you want to do that with normal laptops, you would need I think it was 1 quintillion laptops to do that, which is more laptops than ever were,
Ever
produced in
existed.
the world.
Right.
Even if modern hardware, like the ASCII hardware that is usually used to mine Bitcoin, you would need to buy up the supply of the next 15 years, which of course is also impossible. And let's not talk about the monetary investment, which is trillions and tens of trillions US dollars just to be in the position, that you can start altering the blockchain. So that doesn't make any sense to do that, in my opinion, financial sense to do that. And so the value derives of the sheer size of the decentralized network and the fact that it has become an institutional, adopted, and accepted asset by many. We're talking about when we look at classic asset, one of the largest assets in the world with 2.1 trillion US dollars in market cap. Yeah, and it's scarcer than gold already. This can be measured in stock to flow ratio. So how long in yearly production would it take to get to the same amount that is currently in circulation? For gold, that's 60. So you would need to dig up 60 years of gold production from mines to get to the amount of gold that is currently in circulation. For Bitcoin, since the halving last year, that's at 120. So by that calculation, you could argue it should be double the amount of gold. Gold, worth more, double the. It should have double the market cap, let me put it like this, of gold. Now, gold market cap is at 22 trillion US dollar. It's the large, besides real estate and stuff like this, the largest, let's call it mobile asset in the world. Bitcoin is at 2.1 trillion. So just by this logic, Bitcoin is undervalued by 10x. Doesn't mean it's going immediately up by 10x, but it's probably growing. But it has become unstoppable at this point. And I'm not saying they're not dangerous in the future. Yeah, quantum encryption, for example, or quantum computers cracking encryption with 256 SHA encryption. That's the thing. You basically could mine all the Bitcoin within 1 second and steal all the Bitcoin. But that's the same encryption our banking system has. So a hacker, what is he going first for? Our banking system or Bitcoin? Probably the first one, right? And yet we are here with such a large asset and with so less people understanding it. And it's only going to get worse because we are in the last phase of a bull cycle. In my opinion, next year, in large, at least for many, many months, next year is going to be a bear market again, where probably we are going to see Bitcoin falling by 50, 60, 70, 80% again. And I can already hear the cries again. And when Jonatan and I were going to stream again and tell people, this is the time now to buy Bitcoin. No, it's going down to 10K, Dirk. It's going down to 5K, but it's not.
So is this the technology that you're talking about? So Ilias said you need to understand the technology behind Bitcoin. That's what people don't understand. That sounds like what you just explained.
Yeah, I think what you mean, Ilias, is it's the only, to my knowledge at least, the only technology that allows you to transfer money or to have your money in your pocket or the USB stick as an example, or at least the access code for that, without anybody being able to keep you from it. I mean, if you go to your bank now, Deanna, and you say, look, you know what, I want to transfer 800,000 US dollars to Thailand.
Yeah.
I think your bank is going to give you a hard time, ask you many, many questions. Even though you might explain, well, I run a business there, I want to provide liquidity for the business. They are going to give you a hard time. I just had that, for example, when I sold some of my Bitcoin in the beginning of the year, I had a large amount of money coming onto my business account through that. man, you cannot imagine the amount of questions I had to answer and the proof I needed to provide in order for them to get me out of this list of that I did something illegal, And this is crazy, to just suspect somebody already, you want to do something illegal. So you are not allowed to use your money. With Bitcoin, that cannot happen. I could send you $1 million right now and nobody could keep me from doing that.
Yeah, that's so interesting. Yeah. So if you're saying because this is what Ilya said too, the bear cycle is near. So you're talking about that specific to Bitcoin, to cryptocurrency. So if somebody wanted to get started, would you recommend that they wait, or to me it seems so daunting. I don't trade crypto at all, but it seems so daunting, like your password. I mean, I can't keep track of a pair of sunglasses, much less some kind of code that I have to keep to maintain my crypto, and it just seems so daunting. So but you're saying that maybe now isn't the right time anyway.
Yeah, it always depends on how long your time horizon is. That's why I said if you think in a time horizon of many years, for example, start now, invest a little bit into Bitcoin, like every month. I don't know, like whatever you have left. Somebody might be $10. Somebody else thinks like, I have like $500 or $1,000 left, and then over time you see it grow. But be aware, if you want to trade it, or if you say now, well, I have like an amount of money sitting around, I wonder if I should buy Bitcoin now, that we are in the end stages of a cycle. For me, the most compelling theory that's kind of new also for Bitcoin is something called the Bitcoin power law, which examines Bitcoin as a power law. Power law is a term from physics and biology, which describes systems that act the same on small scales like they do on large scales. Like you can always accept like many events on small scales and just some on large scales. For example, cities, you have many villages worldwide. Then you have also many but less middle-sized towns, and very much less metropoles, like with millions or tens of millions of people living in there. And he applied this to Bitcoin and found out that Bitcoin actually grows on a gradual scale that you can measure since 2009. And this model even prices in the ups and downs of Bitcoin. So he says like the overshooting in those crazy bull markets and the undershooting in the bear markets, it's actually part of the growth trajectory of Bitcoin, and it's very, very natural. And he, for example, says like that by January 2026, we are going to see Bitcoin at around $200,000, which is very much in sync with my model, only that my model is expecting this for November already. And then he says after this, we're entering a bear market, which probably is going to put us down to around $90,000 by December of 2026. And if I see something like this and how well it worked, I say like, I'm slowly scaling out of Bitcoin. I've done so since January because I don't know where exactly the top is going to be. But once we are in Q3 or Q4 of 2026, I'm slowly starting to scale in it again. And it's so beautiful. If it's like we have 3 years of growth in Bitcoin, 1 year of bear market, 3 years of growth, 1 year of bear market. This pattern has held up since 2011. And I mean, this is the holy grail. We look for something like this always as technical analysis, as traders, for repeating patterns. He is right in front of us. But I think most people are not willing to trade this because it's a long time horizon, because it means I have to buy when it's at like minus 50, 60, 70, 80%, when everybody on social media is screaming, it's going down, it's the end of Bitcoin. This is it. And then be the brave one to buy it. And then once everybody is at the top, having the laser eyes on X again, or screaming, it's going to $1 million, to 10 million. This is never going to end growing from now on. It's only going higher. To accept then, well, maybe that's a good time to slowly get out of the game.
Yeah, I mean, that's true for everything, right? You're positioning at a time, or at least, this is how I try to do things, is you're positioning at a time where it looks like it's not ideal, but the plan is there. The plan is in place. Once you get in a situation, like, for example, looking at the S&P, might not be the time to be buying heavily, right? Because the move has happened. Now we need the S&P to catch its breath and then, launch to the next
Yeah.
move. So,
At the same time, of course, you don't want to miss out, no? But this is
right.
where it comes in handy what you were talking about to, start being a little bit more risk adverse when we reach those new all-time highs and continue. And when you see like, 10 bull days in a row, stuff like this, to maybe be a little bit more cautious with your positioning.
I think there's a question on what indicator. It looks very beautiful. It's very
does.
aesthetically pleasing what you're showing, but can you tell us a little bit
This
what?
indicator, what I was showing just now, is by this creator of the Bitcoin Power Law, Giovanni Santosizi. It's a paid indicator, this one. So you might want to check him out on Twitter if you want access to something like this as well. My more simplified model is this logarithmic regression, which has served me very well in projecting like when is a good time to buy Bitcoin, when is a good time to sell Bitcoin, which also shows like, well, the high should be in somewhere, like I said, early November, plus minus, over the last years. I still remember very well when we were down here, Jonatan and I did live streams telling people it's a good time now to buy Bitcoin, but nobody wanted to. We were like at 15, 16,000. People were commenting on the chat, no, it's going to 12, it's going to 10, it's going to 8,000. No, and it's natural. I can understand it. People are afraid then, and they want a good deal. So this indicator here you can search for Bitcoin logarithmic regression by Crypto for Money, which is me on TradingView. It's a free indicator. It's an open source indicator I made publicly available there. Just remember to put it on a logarithmic version of a Bitcoin chart, not a regular one. That's why it's called logarithmic regression and not regular regression. I also made a simplified version of the power law. Let me quickly load this up here. I think it's this one. So this is a simplified version of this one here, where I made like projections of where good and bad prices are according to the power law, what the fair value according to the power law is at the moment where we are with the current price of Bitcoin. If you search for indicators for Bitcoin Power Law by Crypto for Money, you'll also find this on TradingView. Also, open source indicator that I created with a public source code, so you can modify it in any way you seem fit.
That's so cool. Can you show us when you add the indicator what it looks like?
Yeah, it has probably a different name for me. So maybe we switch over to yours. To your, so you can search for, because when I search for it, it shows like different. Type in Bitcoin Power Law. Let's see, is it there already? Can you scroll down a bit?
That's the end of it.
No, crypto. That's the end of it. How come that's the end of it? Okay, tell you what, guys. Next time I'm going to leave a link for you. So I'll ask Jonatan to put the links underneath the description next Monday of our live stream, so you can access this indicator then.
Thank you, Dirk. That'll be interesting to look at.
Yeah.
Let's take a look back at gold. Stephen is asking about gold, and we already talked about gold a little bit, but we can kind of give a recap. And Dirk, I don't think you gave your thoughts on gold, so maybe if you want to take a look as well. But what I was saying on gold is this is the high probability setup that I like to see in the S&P, in gold. Both work very well. So looking for price to dip below a previous day low and then move below and then move above and sort of reside in a level above. And bonus here, not only did it take out the previous day low, but it also took out the swing low here. So again, a swing low is a low that has on either side of it a candle with a higher low. So this is the swing low. So price took out the previous day low, also took out the swing low, and now is pushing above. So to me, this is a high probability setup. Of course, high probability does not mean that it's guaranteed to work. It just means that it's high probability, and so that's something that I'm looking at. There are many reasons that you may have an alternative analysis. You might even think that this is a perfect place to short. But for me, this is a high probability setup that I'm often looking for in the S&P and also in gold.
Yeah, I in a nutshell, I agree with you. So I said it earlier, I see the US futures coming down a little bit, so I wouldn't be surprised to see gold at least move like $10, $15 to the upside. I agree with Dina there, but for me, for a trade, I'm really waiting just until I get the next indication from my system to enter a trade, and when it's going to be take profit of $6, stop loss of $3, and see the outcome. So I think time horizon wise, we are talking about different things right now. Like if we look at the more long-term chart for gold, it's funny how persistent this compression really is here. Oh my God, I've opened too many charts today already, I think. Which one is the right one? Not this one, not this one, whatever. Let's go with this one because it's a daily chart. So we talked about this last time as well. I think, Dina, so this extended area of compression that we're seeing from gold, where sooner or later we are going to see a volatile outbreak. I thought actually it was happening already beginning of last week, but it wasn't. We bounced off as well. And as long as we don't have clarity from that, at least from my point of view, I'm a little bit refraining from swing trading position. Serious of if it does what we saw the last times, is going to be breakout to the north. Higher probability on this. So that speaks for Deanna's view as well, that it's more wise to look for long position at the price we are in right now. In order to invalidate this whole structure also, we need price to move quite a bit to the downside. So we would need to go underneath this low here we had at 3,125. I mean, that's quite some way. I don't want to wait that long, honestly speaking. Yeah, and I can see we have Mike already in the background. Mike the man, do you want to join us? Yeah, join us. There he is. No,
hello, Mike. Good to see you.
Good to see
you, man. How are we doing?
Good.
How's Monday going so far?
It was very fast.
Good.
Yeah, so very fast. Like the 2 hours went by in a breeze.
Yeah, we had a good session. Yeah. It was great. It was great chatting with you, Dirk. I learned Likewise. So much from you every time. Likewise. Here's a question for you too. I think this is a really good question. Referring to your Bitcoin indicator that you showed us, do you have something like that you use on other assets as well, or is that specific to Bitcoin?
That is specific for Bitcoin, because there is currently no other asset, to my knowledge at least, that behaves like Bitcoin when it comes to growing mathematically. Whether you explain that with a logarithmic regression, so like I did on, let me quickly go back on this chart here, for example, or whether you explain that with something like this power law. Two models explaining the same. Two models coincidentally also saying top is going to be probably around 200,000 US dollars, plus minus, of course, always more likely plus. And you cannot do, if you apply a power law to other assets out there, you don't get the same results. This is why Bitcoin for me is also so fascinating, because there is no other assets where you can apply simple mathematical models to, logic. And you get like actual results, and actual results that work and that repeat themselves over and over again. So by that definition, and now I'm getting very philosophical, I agree with Giovanni Santostini, the Italian physicist that created this power law, who says like, well, Bitcoin is not really an asset class. It's more like a what did he say? Like a force of nature, I think he said.
Interesting. Yeah, I think that was the hesitation for a lot of traders and investors in Bitcoin, is there wasn't a history built up, but it was really shocking and surprising to hear you say Bitcoin since 2011. That's 14 years now. Really has a lot of time has gone by, and
quite some data already.
Right. Now that data is here. I remember so it was back, I can't remember what year it was. I want to say like 2015, and a friend came over and he spent like the entire night telling us about this crazy cryptocurrency, my husband and I, and we were like, what is this guy talking about? He's super smart, too smart for us. We have no idea what he's talking about. He's encouraging us to invest in this Bitcoin thing, which we had never heard of before, and we thought, this guy's crazy.
Don't tell me about it. Took me also more years than necessary to understand it.
Right. Yeah, we tried hard, but we just, I don't know. It was beyond me at the time. Still seems very daunting. So
enough about Bitcoin. Let's hand over here to Mike. Is somebody going to join you, Mike, actually today? Or?
LJ should be with me shortly. So,
he'll be on his way. Sure. With some great insights about what to trade and what not to trade today on the markets and for the rest of the week. We said already, very busy week ahead when it comes to economic indicators. I hope you guys enjoyed Deanna's and my session today. If you did so, leave us a like, subscribe to the channel. 80K subscribers already, heading straight to the 100,000 with your help. So thank you very, very much for that, guys. And yeah, see you from my side, at least latest next Monday again. No, that's not true. On Wednesday on ABL Labs on our Beyond the Ticker podcast with AJ. And yeah, thank you, Deanna, for having me again and doing this with me. And all the best for you, Mike.
Cheers, guys. See you in a bit.
Thank you, Dirk. Thank you.
How are we doing, guys? Hope everybody is well. Who have we got in the chat? We've got Nora, we've got Kim, Stephen. Good to see you, Stephen. Good to see you, Raf. 2944 in with us as well. Hope you guys are all doing well. What are we all looking at? What have you all been picking up on? Akram, good to see you, my friend. Hope you are well, my man. Who's been looking at gold? Gold trades. Those of you watching ABL earlier on would have seen I was in a gold trade earlier, a couple of gold trades earlier that didn't hold. This is the latest one. This was the third idea that I had. So there was an entry here, and there was an entry with this wick somewhere around here. So third time lucky is the aim here. So looking at us to react from this area now. The only problem is with this position, we've started with this weakness down here. So we've got an inside bar there, and we also got that's not wickless, so that's all right, but this low doesn't look great. But if we look at it on the 1 minute, it doesn't look too bad. We had this wick, we had this retest, it didn't break the low, and we've gone on up from there. So where we are right now, we've broken this structure here and we're retesting this. We didn't respect this level, but let me just hide that. But the way that we've wicked just now on the 1 minute is somewhat promising. But you see we've got 1, 2, 3 long 1 minute wicks all on here, so we've got to be careful that we're not going to get caught out. But I'm still quietly optimistic, because the 1 minute can show us one thing, but then on the higher time frames it can look very, very different. So we'll see how it plays out. But at the moment, we want to now see the 1 minute break these wicks down here, or these wicks up here, sorry, this 1, 2, 3, because those are looking very, very strong for buys, sorry, for sells, should I say. So yeah, but let me know, guys, what are you trading at the moment? Nora, you're in a short. That's not what I want to hear. I want to hear you in a long, not in a short. But I can, if you're in a short from up here, then I can understand why. Tech Tide is in a GU entry for buy. Let's have a look. GU was one that we were looking at earlier with regards to potential trades today. And the reason for that was we had both USD and pound looking very, very strong. Now, there may well be a divergence on this, because if we go to Friday, we can see that the pound was the weakest whilst the dollar was the strongest. So seeing pound strength isn't surprising, but the dollar strength is continuing. So, I mean, you could argue that there's going to be some kind of movement on pound dollar, but actually, if you look at it, if I turn off those moving averages, it's rather choppy this morning. It's rather choppy. So I would be, I'll be quite careful, okay? Because we are in a higher time frame area, which I would personally be looking for buys from. We've come up to this structure here, and we're reacting off this support. Personally, I do think we're kind of stuck at the moment trying to decide which way we want to go. So GU right now, looking at it, I feel as though it's going to be cancelling. They're just going to cancel each other out. I'd be more interested in Euro USD or Aussie USD or even Pound Aussie. Those are going to potentially give us more opportunities today. So Pound Aussie, for example, you can see here we had this big move, this big move this morning. So I'd be looking to trade this. At the moment, it looks like a decent sell opportunity. Not sure if I see it coming all the way back down. Let's have a look on the 4 hour maybe. Yeah, it's not a bad opportunity. I mean, it's already done this structure here. So we've broken, came back down, broken again. So we've broken that 100. So theoretically, you could look at sells. I don't know. But you've got this structure here that it's bouncing off from. And on the daily, we've got this big engulfing candle formed. Now, there's still 10 hours left on today. So are we going to see this wider structure act as support, which I think is it's a weekly engulfing candle to the upside, as you can see there. So can we expect to see some strength coming back in? Theoretically, yes, because again, if you look at what we've left behind, we've left, for example, this weekly inside bar here. So there is liquidity further down. That's the only other thing to just bear in mind, is that from that fib move, we've got a really nice level here around about the 195, 195.9. So again, not one that I could stick my flag in the sand and say for sure this is going to sell or buy, but certainly one to keep an eye on if you do a bit more of a digging into the bias and the structure, and go from there. But going back to GU, there's GU. GU is in that structure. I just don't like the way that wick, as you see that wick there. I think we're into sells, if I'm honest. Possibly down to kind of the 131 mark, maybe. Take it down to the daily. Yeah, look, we've got levels like this one here, for example, an inside bar there. So it's not a particularly strong low structure here. And Thursday's candle was a big engulfing candle to the downside. So potentially we're going to see some strength coming in into the dollar versus the pound. We look at the Dixie. Dixie has hit the 38.20 level on this fib move down. Again, are we now going to start to see it push back up and close this old structure, or are we going to see us push further down down to kind of the 95.5 area. Again, not clear right now where it's going to go. As Dirk and Deanna were saying, the news this week is going to be quite volatile, I would say. So you might not see moves necessarily happening, too bigger moves happening until later on in the week when those catalysts start to trigger them. Let's see what else we got. Milos is saying he's in a long on gold from 33.38. Let's have a look. Go to the 5 minutes. So 5 minutes, yeah, it's not looking particularly wonderful, I've got to say. Let's see. Yes, it's broken past this one, so that's looking promising. And what have we got here? I think that's a perfect equal high, is it? It is. Yeah, so it's looking good for long actually right now. You see we had this wick rejection, and I think oh no, we've started with an equal low as well. So it's not looking entirely clean, but I do think we're in on buys. If you got in down here, 33, 38, 34, so you got in up here. So obviously in a bit of drawdown at the moment, Milos. Not sure where you got your stop losses, but I would certainly I'll certainly be still holding this. It's not giving me any clear structure right now to say that we're not going higher. So yeah. Eheb saying long dollar CAD. Where's my mouse gone? There we go. Dollar CAD. On the 1 minute, I wouldn't necessarily, not yet. It hasn't found any support, and it's not finding any structure here to suggest that it's getting rejected. No, I mean, apart from the 10 minute, but it's not reacting off anything. I would be cautious on that. At the moment, what you're seeing on USD CAD actually is you've got a turning point here on the 1 hour, and then you've got these two here. See how this one's retesting the wick of that one to then push further down? That's a pretty strong suggestion that it's going to go lower, at least in the interim. 2 hour had this wick rejection, and it has left levels such as this one here for price to come and gather up before moving up higher. So long on the USD CAD right now doesn't look ideal to me. Doesn't look ideal, but I could be wrong. Let's have a look on the 11 hour. 11 hour does look better. 11 hour does look better. 9 hour, not entirely convincing. 8 hours left this inside bar down here as well. 7 hour, I'd be quietly cautious on this. I mean, what would be your trade on this? Is probably what I would ask. You took a fib from there to there. You might maybe look for an entry in this pocket here, maybe. Belongs, maybe. But it doesn't, not really seeing anything clearly on this one, if I'm honest. But that's just me. But if you see it, then follow your trade plan and go for it, my friend. Pound yen, the 4 hour candle is bullish, and I hope for a drop at some point in the next 1 hour. Let's have a look. Pound yen. Pound yen, yeah, it's taken this level, which was actually already previously taken. It took these here and it's pushed on up. Still kind of respecting that trend line, if I'm honest. But pound generally is very, very strong. You've got this structure here, 1, 2 engulfing candle, or this rejection candle, and then this engulfing candle to the upside. I would say you're looking at longs on pound yen on the that was the 1 hour. On the 4 hour, I'm not sure you're going to see a rejection. I think you're going to, if anything, you're going to see, oh, actually, hang on a second. Perfect equal low. You could well be right there. Who was that said that? Timothy. Could well be right. This is major liquidity, so you just want to see how it's going to treat it. If you see a rejection from here, actually where it is right now might not be bad for sells, but if it breaks this structure, then it's going to go higher. If it breaks that, in fact, it's breaking this one, which I would have liked to have seen respected. 15-minute. Yeah, it doesn't look brilliant, if I'm honest. Doesn't look wonderful for sells, but we'll see. Euro JPY could be interesting for a long in 15 minutes, holding higher time frame momentum. For a long, I'm not seeing it. I'm not seeing it. I mean, I can see why, but again, I mean, you're gonna have to look for the next 8 minutes. I mean, it's already broken this previous low, so I can see it still coming down a bit further. If I'm honest with you, let's see what the yen is doing right now. The yen is actually kind of sitting flat. So I probably would stay away from the yen right now because it's not showing anything either way. So I'd be cautious with the yen. Stephen, what time frames do I prefer? I love the 1 minute, if I'm honest. The 1 minute is the devil inside of me. Just get such ridiculously tight entries in terms of stop losses. So I do enjoy the 1 minute, but the higher time frames are probably safer and will stop me from blowing so many accounts. But the higher time frames don't make good content. So on live trading rooms. So yeah. Mohammed's asking, what indicator do I have on the chart? I don't have any indicators on the charts. I do have some saved here with some SMAs. So 20, 50, 100 and 200 SMA. Or you've got the EMAs at the 21, the 50 and the 200. Or you've got just this sessions indicator. Just use that for indicating what sessions are open and when. Just find that kind of handy, but I don't really use it too much. But it does have other nice levels. For example, the previous week high, previous week low. Nice little bits and pieces just that can be handy and useful if you're doing analysis. But for the most part, I'm just using it with the levels that I have and looking for the liquidity levels. So Andres, this was, whose idea was this? This was somebody's idea. Somebody said to me, Akram will know. Akram, who was it who came up with the idea? And this was like I think it was like 22 and a half hours or something like that, isn't it? The 1350? I can't remember now. Akram will remember. Whose idea was it? I think it was like 22 and a half hours or something like that. Somebody came up with it, and I put it on there. And I don't really use it, if I'm honest. But yeah, it is. It was a random time frame. But I mean, if I looked at that, we're reacting off this higher time frame structure. But the way we bounced off this, I wouldn't be surprised to see us coming up to the 174.5 area on that fib level. So yeah. Lawrence is saying, watching from India, welcome. Gold, should I buy after the 5-minute trend line breakout or retest? I can't tell you that, Lawrence. The reason being is because you need to have your own strategy. You need to have your own way of looking at the markets and looking at the charts. If you see a structure that makes sense to you, then you should trade it. But it needs to stick to your plan. I wouldn't be able to tell you whether you should buy it or not, because I don't know your strategy. I don't know your risk management. I don't know whether you're swing trading or any of those things. So you need to look at it and mark it up yourself and try and get a steer on the bias and make sure you've got a setup that makes sense to you. So yeah. Are you making us lose or win? I'm not making you do anything, is there? Nothing at all. So you guys come in and you go in and make your own decisions, right? As Martin I says, yeah. Just I look at the charts, pull out what I can see. If you see something and you want me to have a look at it, then give me the context, give me what you're seeing, and I can go in and say whether I agree or disagree. So yeah. Not sure what perspective it is, Akram, but you're welcome and thank you. So yeah. Do indicators work really? Tech tides, they do for some people, yeah. LJ uses them and he's an incredibly successful trader. So you can most definitely be profitable and be successful as a trader with indicators. You just need to know how to use them. You need to use them in the right way and help them let them give you an edge, and then go from there. How is my 5k phase 2 going? Sadly, I blew it on Friday, day 1 of phase 2, and my head was all over the place and I shouldn't have been trading, and I went in thinking, right, let me go and make $25 profit so I could get one of those profitable days, and I just I blew it completely. Unfortunately, my head wasn't in the right game, and I wasn't focused, so yeah, I blew it sadly. But as I was saying on ABL earlier, I'm not feeling particularly well over the weekend. I think I'm coming down with a cold or something. So I've been working a lot. I've been doing all sorts of things. So my trading just isn't. I'm really only trading when I'm on stream, and when I'm not on stream, if I then start trading, I'm not really focused on it. And that's what happened on Friday, if I'm honest. I think I took a couple of trades after the stream on Friday on ABL, and yeah, just wasn't a good decision. It wasn't a good decision, but live and learn and move on from it. So yeah. I think it was Steven. Was it Steven? Yeah, it might have been Steven actually. That was right. Yeah, I think it was Steven. Is SMT in Forex? No idea. Not got a clue. Sell or buy? Don't know, Mohammed. Sell or buy? What are you selling? Tell me. I might buy it. I don't know. If you'd give me a good price. Gold looking like it's going to melt. Not what I'm thinking personally. It is creating this kind of funny structure. It's taken this low here that you can see here, and yeah, I'm not seeing anything clear right now. If I look at it from a liquidity level perspective, we've got tons and tons of liquidity higher up here, just loads of it, that I think price is going to be coming to take. You've got another one up here, you've got another one up here. There's just so many levels here, and there's not really much below other than this one down here. So if we go to the 15 minute, for example, you're seeing this one. All of these are 15 minute levels now. So I'll update that. I'm not seeing it necessarily, but I've been wrong in the past, and I will be wrong again in the future, and might even be wrong now. You have a mind, use it. It's free. I'm not sure who you're talking to, 29, but thank you. Sorry about that. Yeah, don't worry, it's fine. I'm really not. I've got so many other things. So yeah. You're right, Mike. There is a breakout on the 5 minute time frame for bullish on pound yen. Yeah, there you go. So I don't know where it was when I looked at it. It was probably about here somewhere. Didn't see it holding this. It's come for this level, so looks good for probably more longs. Just watch out for this level here. It might come back and retest this, that I've obviously got marked out for some reason previously. And you can see here that price has come into this area previously and pushed on up. So just be careful if you are trading GJ. Is gold collecting liquidity? It's always collecting liquidity, William. Always collecting it. So yeah, that's what gold lives off. Sweeps everyone either side of it. The smart money trap, I don't know. The smart money trap, Trader Higgs. But smart money's everywhere. Smart money isn't just in indices or Bitcoin or gold or wherever. It's everywhere. So yeah. Selling at 50, says Hamza. Not sure what you're selling. Or are you selling when you get to 50 years old? What are you? I'm confused. Let me know. Nah, sells was 45.40 from H1 resistance. What, from up here? I don't know. See how we've wick rejected here? I wouldn't be so sure. We've just opened up a new 1 hour candle with no wick though. So that already is going to be a level that I expect price to come and take before we make any moves. So probably a new nice entry might be something like this. Stop below there and watch us go up. Thoughts on that one? The one that I had earlier, that one there. The hourly, you can see here, was in this little pocket that I'd marked out earlier. Came in, tapped into it. So second one would be probably along those lines. I can't take it. Level. Get bigger. Let's see. Might get tapped in, it might not. But I'm expecting that as the next support level, so that could be a nice re-entry position on that one. Pound CHF Martin's asking for. Pound CHF. On a merry run on the 5 minutes. Really hasn't stopped since this move here. The pound is up, generally speaking, as you can see across all of these. Not a bad one to look at. If we look at the strength scores, the Swiss is showing some weakness, but I'd probably actually be looking at maybe the pound, the euro pound actually, but pound Swiss, looking at the 1 hour, made a nice big bullish move up. Let's see, where do we look on the daily, for example? You've certainly got another level up here, there, and you've got another one there. Certainly plenty to look for a move back up. We haven't really rejected off this level here. That's the only thing, and there's this bigger structure further back, which is probably on a weekly time frame or some other time frame that I've marked out. So I would want to see something more convincing than what we have right now. You might see actually some more sells come in, because if you just look at how that 2-day and the daily candles, they haven't really rejected at all. The 3-day is rejecting, which adds, argument to buys. We've got something there, for example. The 4-day, again, less so. But again, it's leaving this level here. 11 day, nothing really there. I'm not seeing any clear structure to suggest one way or the other at the moment on pound yen, pound Swiss, if I'm being honest with you. There's certainly much more liquidity up above, and if you look where we are, we're incredibly low. So it does look good for looking for maybe swing buys, but I just don't know if I like the structure of how it's forming. That's your current structured support, I would say. Resistance up there on that line there. So you might see some sells come in at the moment. Where it is, just seeing that move down. Yeah, it actually looks nice for sells right now. Possibly on pound. Yeah, pound Swiss. Stick a stop just above that structure there, maybe, and then sell it down. You might get something decent, but it's not the best of structures to react from, if I'm honest, because you still have this inside bar on the 1 hour. So if we look on the 5 minute, we're not seeing anything yet to say, right, this is forming a directional change. And if we go to the 1 minute, it's got this wickless candle here. Don't think that's what I love. I'd probably look for the better opportunity would be to go there. Look for price to take this level or reject from this liquidity level that I just marked out. So you could argue go for that one there. You go there. Let it break this low here, or let it break this low. That's maybe a safer trade, if you like. Or the other one is let it come up to here, take that liquidity level, and then sell from there. Obviously, you get a better risk to reward for that one. So yeah, okay. Nuggets and Nonsense says been in a gold sell since 33.38.66. Very nice, very nice. Hamza says I shouldn't say that, right? Say what? Say what you want as long as it's not rude. Friday's 1 hour trap candle before London. Mike, is it normal to use two types of strategies when approaching the market? Is it normal? It's up to you. You know, use whatever strategies you want to use, my friend. You know, you can't have anyone tell you how to trade. You know, you've got to trade how you feel comfortable and how you feel is doing yourself justice and doing yourself worthy of how you want to trade. So I can't tell you the best way for you to trade. You've got to know for yourself, really. Euro USD we looked at earlier, but I'll look at it again. That could be a nice entry there. That pound Swiss, by the way, where it's forming the structure now with this inside bar. Got this liquidity just here on that inside bar, so looking for it to sell off. Wick rejection, and look for it to sell. Might not hold. It looks suspiciously like it might come up and take this wickless candle on the 1 minute. So not a great opportunity just yet. Going to be high risk on this one, but if you risk a low amount and you hold it for that swing, then you might get a nice trade. So So yeah. GU is moving. Is it? I guess it is. Not really, in the grand scheme of things, I would say. Meme. No worries, Martin. Sorry, Tech Tide. Going long on a pullback 15-minute USD CAD target high. This is Chris. Going long. Yeah, I'd still be waiting on USD CAD myself personally, but I don't know what you're looking at specifically. Euro USD, we've broken this low. Are we going to finally find some support, or are we going to keep going lower? Let's have a look. We have got a new structure forming at the moment. So let's see, what have we got to target? Even just on the 1 minute, got 1, 2, 3, 4. Quite a few levels, even just here. On the 5 minutes, I'd say EU looks good for buys right now. If it can react as it is right now, in fact, it looks good for buys. How far high it would go, I don't know, because you've got this structure here. So it does look like on the lower time frames it wants to still sell. But there is certainly plenty of liquidity on this move down that I think price is going to want to take. And this wider structure is on the, what was it on? The weekly. It was a weekly sell candle here, this wick. So we're in that area right now. We still have liquidity down here for us to come and take. But I think I don't know. I feel as though we're going to go higher. But the dollar right now is the one that's calling all the shots, really. So, Arslan, I don't know why you're posting or spamming in the chat like that, but please don't do it. The lure guide, I've returned, gave some profits back to the market. However, with risk management, I was stingy. Got to be careful. I have an issue. Myself and a friend have an identical trading style, but it annoys me because I catch myself making the same mistakes. I learned most of what I know from him. A couple of bad habits. I can be at home, not speaking to him, and we trade nearly the same positions. It's weird. Less than 100 pip difference each time. Coincidence? You're looking at the charts in the same way, so it's not entirely surprising, if I'm honest. Gold is stuck because there's the same number of buyers as there are sellers, so everyone's just equalizing themselves out. Not a surprise, really. Yeah, look, gold, it's not quite there, but slowly but surely might start to make a move. Corner gold surprised me today. It slapped me so hard I thought it was still Sunday. That's not the best of ways to look at it. It's not the best of ways to look at it. Floating profit, I had open sell now. Meme invests, I'm sorry, I'm not sure what, I can't remember what asset you're trading, remind me. Studies corner is stuck in a sell on what? Here he is. How you doing, LJ? You alright?
Yeah, better now. I've been on the phones for about an hour right now, so yeah. But we're here. Trading. Good.
We know the story between the 13-50-minute charts. Jonatan, basically, I have random time frames, and one of the regular viewers came up with a random time frame of 22.5 hours. I think it was 22.5 hours. And I said, okay, tell me how many that is in minutes, and I can add it to the chart. So add it to the chart, but I don't actually use it. it's I haven't back tested it or checked it or anything to see what it does. I mean, it just looks horrible with lots of wicks. So yeah. Lure says, I did learn from my mistake though. I should have called it quits after a good win. Yeah, always the way, my friend, always the way. But yeah, so we'll see. I mean, that's the potential position idea for gold. If it comes down that low, it is just consolidating. Gold is just coiling up, ready for a breakout. I think it's probably going to go higher rather than lower, but who knows? It's just putting these levels either side of it. So if I was to hide that, not that one. If I hide that and hide that, you can see we've taken that wickless candle that the hourly started on, and now we've got this 5 minute on either side. So currently that's our resistance up here, and then probably looking for buys heading up. If we break that, then looking for it to break up to the upside. If we look at the hourly did reject quite nicely from here, so looks semi-decent for buys, at least up to here on the 2 hour. So at least up to 343, I think. Timothy says pound yen was a bad breakout to the downside. Yeah, I mean, I did say there's this level here. I said that there's this level here at, what is it, 198.95, 945. That's a level that could be targeted. So you've got to be careful with that. Because once it took that higher structure, it will then come down to retest the lower parts before it goes on higher. What are you looking at, LJ? You got anything on your watch list at the moment?
NASDAQ is definitely my number one for today. Same with gold, like you're looking at before. I think we will run higher in gold. Right now, if we go to... do we have my chart here somewhere? Possibly, do we? Yep, there it is.
Oh, no, we don't.
Maybe not.
Now we do.
Yeah, so NASDAQ is still my number one trade for today. This was what we entered in ABL earlier, right? Looking for close of the gap. This is also where the options levels are for today, around 23281. So we're targeting just above that level right here, about the 23,000 mark, right?
Yep.
Already on the way. Same with the gold trade. I think we're definitely going higher there. A bit slow at the moment on gold, but I think that's the ways up. So,
yep.
Euro dollar, I did just get stopped out on that. Very sad.
Yeah.
The Euro dollar long, but I think Euro dollar, pound dollar are still kind of heading lower. So the other one is the Aussie, which is holding up a bit better than the other guys right now. So got a long sat in here as well at 65.20. Looking for higher levels just to this now price support, now resistance area just up here, about 65.50. So yeah. What are you in, Mike? Is just the gold trades today?
Just gold at the moment. Just gold. Nothing else is really jumping out at me to offer anything obvious, I don't think. Nothing that I'm liking the look of, if I'm honest, right now.
No, that's fair. I agree.
So, I mean, gold has come down, taken the low now, and it's taken that inside bar. So, be interesting to see how it reacts from where it is right now on the 5 minute. We're retesting this Let me pull up my chart.
Yeah.
We're retesting these two candles just here. I do hate the way that it flickers when you want to click on a trade. Just hide that. But we're basically retesting these two here, and nice bullish momentum coming in on that candle. So quietly optimistic. Where that's closing now looks decent. So we might now start to see some buyers take over. But the 2 minute, the way that it's broken down here, doesn't look ideal, if I'm honest. It's very, very indecisive right now. So yeah, we'll see. Nice bit of momentum coming in on the 5 minute. Hopefully it can carry on. But yeah, you see, that's not the kind of reaction you want to see. Ideally, you want to see it pushing harder, and breaking that structure that we had here. These kind of engulfing candles here. Looks like it wants to push down lower. So we'll see. In the context, as you said, gold in make it or break it spot. Add to that, NFP week could be in a ranging mode whipsaw. Sellers and buyers to gather that liquidity overflow, but tricky to pick its way. Yeah. I mean, I don't know. I'm maybe this could be my problem. Maybe I'm too married to the long bias, because overall I'm short gold, but not need to keep that in the back of my mind that it might not be. It might just go. And we might already be in the sells for the week. I don't think we are, but we are coming into the last few days of the month as well, so we've got to take that into account as well, in terms of how positions did when you're closing for the last few days. So but right now, yeah, you see, ideally you'd want to see it really push on up on that 1 minute candle, and it's just not really doing it. If you look, practically every bullish candle is followed by a bearish candle, and any moves that it's making aren't particularly significant. They're all just breaking down either side of it. So yeah, not no clear picture for me at the moment, I would say. Study the NFP reaction with the 1 minute chart. Okay, if you would care to elaborate a bit more, then we can do that. Although I don't know if I've got the data to go back that far, but certainly can do. Could someone tell gold to crash down to 33.18? I kind of hope it doesn't, if I'm honest, but we'll see. I'm in longs, so I would like to see it go. I mean, I just want to see it take all of this levels. Look, it's all just sitting there ready to be taken, and there's nothing except for this weak low here. There's just nothing there. So I feel as though we're due to break out to the upside, just with all of these different levels being added to it. So we will see. 15 minutes in a nice area to react from this long wick, and from this one here, looking for a push up. There's a lot of reasons for longs. I'm not seeing that many for sells at the moment. Let's Motorcar is asking for $1 Swiss on the 5 minute. What are you seeing, Motorcar? What are you seeing on the 5 minute of the $1 Swiss? Nice high levels. Hasn't held. See that structure there, 1, 2 on the 5 minute. Doesn't look very clean for sells, if that's what you're thinking.
I don't think so.
I don't think it's finished that, if I'm honest. I think it's probably got a little bit more room to go, probably up to this kind of area here. on the hourly. Somewhere like that. So kind of the 802 area is probably what I'd be looking at. 5 minute looks tempting, but I'm pretty sure it's going to break that high any second. Yeah, and it's just closed. Yeah, no, doesn't look like a sell just yet for me.
I think 80-20 is definitely a better level. Euro dollar is still running up as well. So as far as the dollar complex, not done just yet.
Yeah. Do you want to pull up the NAS? You were saying you were looking at the NAS.
Yeah, sure. So NAS, we're looking at shorts at the minute, myself. So it ended here earlier during early London. Looking for the shorts through here down to close that gap as well. Also aligning with the options levels for today for New York cut. So that's the expected price distribution per the options levels. Go over here. So you have that 23,280 level, roughly. So the gap is just here, just above that. So targeting just below that also coincides with the 200 moving average on the 15-minute. Fair trade. Multiple areas stacking up right there. So I see shorts on the indices right now until we close that, and then a bounce from there. So
overall still long, but looking for shorts for today.
Yeah, overall still long. Today's shorts as far as the gap higher, and then we've had that move up as well. So obviously, it's a reasonable trade to short that, get a retracement of the move. Overall, the larger picture is very much bullish, obviously, overall. We just had higher lows, higher highs, higher lows, higher, back and forth, whole way up. So same deal with today. I would see shorts from now and then go long back into this cluster of liquidity right down here. Got the highs through here all the way through. So you target this level, see through here, and then see the drive higher from that. That'll be a fair trade right there. You got a similar story on Bitcoin. Drive higher. Obviously, there's no gaps on here because we trade Bitcoin on weekends as well. But same deal, we've had that pullback through here. You can also see to go long on Bitcoin from these kind of lower areas around the moving averages, about 118, and then drive higher to all-time highs potentially. So yeah, NASDAQ is that way. The S&P, the Dow, everything will follow similar suit. Similarly with the other major indice pairs, whether it's the DAX, JP225, you got the ASX, all the rest. Similar deal, they're kind of all following in suit, just the US pairs have a slight lead on them from there. So see the same thing across the board.
Lovely stuff. Maybe if you ask nicely, gold loves it when somebody has place. Manlio, sorry. I think LJ just went through Euro USD, if I'm not mistaken. So if you go back a few minutes, you will see his analysis on that. Tech side, I'm not really sure what you're referring to in this exactly. Can you compare today's charts with 2020 by manipulation? I need you to be more specific, please. And Martin, when did you short, or you're waiting for a level for a long? I'm not sure what you're referring to, 29. Anyway, so you're in another long on Euro USD?
Yeah, so USD, another long. Originally, I was in up here slightly too early, around that 70 level, got stopped out. same distance re-entered over here. Still happy to go long on euro dollar. I think we'll find a bottom somewhere here. Obviously, no data on the cards for today. We're down 0.76%. So as far as like an ATR, at some point we should find a relative bottom somewhere around here, and then get a bit of a retracement. So I think it's a fair trade. Obviously, we got the Fed through the week, and then the non-farm payroll at the end of the week. That's the main things to keep on watch. From here, we had the gap higher, move up to 1770. We've now dropped all the way down 1640. 130 points. No news on the cards. We had the news over the weekend as far as the trade deals, which should be positive. That's why we gapped higher and we pulled off since. So I would say this is a bit of a extension of price. Probably a bit overdone overall, given there's no new catalyst other than the positive news over the weekend. So yeah, from here I would see longs at some point after we find a base. I'm just staying here at about 0.4% risk. So any of these that get stopped out after re-long, you got like a 4-to-1, 6-to-1.
Yep.
Depending how far you want to drive the thing. So
good stuff.
Yeah.
So whoever it was asking for Euro USD, there you go. We did it for you again. Nuggets of Nonsense says he's going to rinse GU in New York. And Robble says looking at a long buy for GU. Any thoughts? I don't like the look of GU today. GU, because the pound is showing strength as well as the dollar. So I just think they're going to cancel each other out. I'm not sure you're going to get much of a move, whereas I think Euro USD, you might get more of a move.
Yeah. GU has, like, the pound is definitely fared better per, like, the euro collapsing. But the trouble is when you get that, like, the pound is likely to retrace to, say 134.40.
Yeah.
Per the current structure. So it's like 30 points. Whereas you can see the euro dollar easily retracing right back up to 117.
Yeah.
Currently sitting at, 116.45. So you definitely got more distance to run in the euro dollar per pound dollar. You could even see us coming up a lot further, coming back into where we opened this week, right? Get a much bigger move. So I would say, overall, I would preference the euro dollar versus the pound dollar if I had to pick one.
If I was going to look at anything, I'd actually be looking at euro pound right now.
That's a fair shout, actually.
Euro pound, if you look at it on the 15-minute, has sold off like you wouldn't believe. So a sell right now on euro pound wouldn't be a bad shout at all.
A sell or a buy, like for a retrace?
A buy.
Yeah, a buy. Yeah.
I'd buy it up. Nice big sell-off earlier. Looks like a nice area for.
That's definitely a good op. To be honest, I like that.
Yeah.
And so we go at spot here. Get rid of that. TP 200 moving average stop down here. You've got this like equal bottom with the wicks over here. Right. That's fair support. That's good buy. Retracement. Done.
Yep.
And then you can run it further from there. So you got like a T1, T2, T3, and like a 1.5 somewhere through there.
Yep.
Right.
Yep.
I think it's a fair shout.
29.
Probably very good for today, to be honest.
29.44. Whoever took USD CAD, good job. I can't remember who was looking at. Somebody was looking at USD CAD. I'm not really seeing anything on USD CAD. If I'm
What have we
honest,
done on dollar CAD? Yeah,
it's
we had
not.
this through last week. I think we were talking about this on the what we mean Thursday through the Fivers and ABL stream, like a retracement up, which we have got. We punch on from there, but where we are now, this kind of feels like a, I don't know, no man's land, bit of neutral zone, that kind of thing. If anything, I would say we probably retrace from here. Yeah. Give me a sec. That's my...
That'll be LJ's dinner probably. Yeah, I'm not seeing anything on dollar CAD at the moment. It hasn't really done anything. We were looking at these levels down here for potential buys. It's not really done much. So yeah, Robert, we just talked about pound dollar. So if you go back, you'll have a look. Mohit is saying you will get failed in this buying because clearly indication that today is falling. Two things, Mohit. No need for the capital letters. Same with U29. And if you want to take pleasure in us looking at trades and it not working out, knock yourself out. But it hasn't happened yet. So Signature's asking for prediction for gold. We don't give signals, but at the moment both LJ and I are looking at longs before a wider a higher time frame bias of selling. Patrick, welcome. Good to see you. Hope you're well. Good for you. I'm not sure what exactly your entry was, but congratulations if you took a USD CAD buy. Sorry, you were looking. What were you looking at, LJ?
We were looking at dollar CAD. So I was saying, like from here, after this run up, I would say we see further downside from here. Bit of a retracement. Obviously, we had this run up from last week. This is sort of the general resistance, I would say. They were right sitting on that, testing that. So I would see a retracement for any further upside if you're interested in further upside. So buying here, would not recommend. I'd see a bit of a retrace, at least back to 137 flat to 137.10, maybe, at least, right, before running higher. So I think we've kind of exhausted that move from last week. If you got in down here, great. Right now, it's a bit more of a neutral zone, bit questionable, that kind of thing. So wouldn't have high confidence in that continuing from here. So especially when we go to like dollar yen right here, we're coming up to resistance kind of areas. We've kind of extended the move. Fair shot, we see a retracement first before any continuation. Yep. And if you go to dollar index, like look at that, we've just pumped on. Right. Yep. At some point, we're going to find a level to kind of chill out. Say we go to let's go back to the 1 hour. Like, look at that pump. Hours and hours on end today. We've had no news, no nothing. But we do have FOMC, non-farm payrolls. We got a bunch of other interim points of data for various spots in between. So I would say retrace down to this relative level. That was the old support. It bounced off. So I'd say you got, call it 30 points to pull back on the dollar index. Similar deal with euro dollar pulling back up.
Yep.
And then from there, you can consider dollar longs from there. So whether you go dirt, that would make sense, but I wouldn't long from here. I'd say we're dollar short from now. A bit extended for the day. So
Yasin, can we get rid of Azar's comment? It's totally unnecessary. Azar, if you want to comment like that, you can go find another stream.
Thanks, Mike.
Just unnecessary.
Appreciate that.
Frankly. So USD.
No, it's alright. It's alright. I'll be one of them. It's fine.
No,
I ain't scared. Yeah,
but
it's alright.
Gold's still struggling to find that move up. Very, very unclear what gold wants to do right now. I mean, it looks like it wants to break down and take the low at 33, 34, 32, because that's a 90-minute inside bar. So it looks like it's trying to form structure to come and take this low, but it's kind of making these impulsive moves and then it's just stalling, as you can see here. So, it's taking these liquidity levels and then deciding to go back up. This move here, we've got liquidity there. It's on the 3 minute, it's showing this big engulfing candle to the downside. 5 minute is then wicking back up. It's not making a clear case either way right now. It's just very, very choppy. But it doesn't change the fact that you've still got, areas here to look at. I mean, the way that it's sold off from this point does suggest that it's looking to leave this stuff behind for the time being. But for how long, I wouldn't want to say, because it's not very convincing. There just isn't much down here, whereas there's lots and lots all the way up here. But I don't mind being wrong. We'll see how it plays out. That Euro GBP has actually broken out of that zone, so I'm not sure if Euro GBP is going to be a long after all. Broke out this structure here, so possibly further shorts, which again, not entirely surprising, but there will have to be some kind of pullback eventually, because it can't keep going forever. Just trying to see where would it come to, maybe down to this level here, this little cluster, something like that might be a nice area for looking for a reaction, because it's broken out of this structure here. That's why I'm thinking maybe that's the next one for it to come and react from, potentially.
I agree. I've basically got this. So, right, that's if you go to the 1 hour, that's where the 200 moving average is. To go through there, tap into there, maybe a slight overshoot, you've got like 75 or so, and then a retrace back up into the midpoint from there. It's not a bad shout, honestly, as far as Euro pound. Because that's gotten stormed lower. That's a big drop, to be fair.
Yeah. Reverse the mean,
yeah.
Reasonable to expect something like that.
All the way up, all the way down type trades. So, yeah. It's always stairs up, elevated down as well, which is kind of what we've got. So, but yeah, look at 86, 70. I mean, that's 79 rather than the 200, but touch below, I would expect it'll kick on. Could go all the way to 86, 70, potentially. So it could even drop the entry point to about here. Let's stop there. TP up here, just below 87.20, so 87.17. And you got 6.4 right there. What do you think of that, Mike? Good? Bad? No? Would you take that? We came down to that. I feel that's fair, right? Like just below the right? And
what's that on the 1 hour?
See?
Yeah. No, that's
that's a big boy.
It's a bit lower than the level that I marked out. I marked out, what was it? 86779 to 86796 as a potential first reaction point. But yeah, that next one down does look also reasonable. Kind of the 867 mark. Yeah.
Because that's where you were just saying was where I'd originally have the entry. But I feel like there's a fair shot, seeing as like we still got that momentum through here that we might get a slight overshoot, come down a bit lower before retracing. But right there, that 200 is basically what you were saying.
So. Anyone want to look at gold? Do you want to have a look at gold, LJ?
Oh yeah. Oh, what's happening with gold? Oh yeah. Mate, dude, this thing is going up. Alright, boys. Today, I should say, ladies and gentlemen, preferred trade today, like we were saying in ABL, to be honest, is gold going higher. I think we've got that move up into here. So you got the interim standpoint 64, and I would say it's about 72, and then up here at around 80. So that would definitely be my preferred trade for today for gold. Definitely higher. Like look at this structure.
Yeah.
That's 100% saying we're up. We're going up. That's a pump right there. So
Andreas is asking,
good call.
Aussie New Zealand.
Oh, don't start this. Oh, come on.
Not me.
None of this.
Andreas is asking, not me.
Mate,
I'm just asking the questions the audience are asking.
Is New Zealand a real country? Are you sure? They've been acclimated by Australia, just like the Gulf of America, right?
Don't be bitter and just tell people what you think about the currencies.
To be honest, look, I think we actually have more downside for Aussie NZD. So basically, New Zealand dollar stronger. To be honest, I think we'll get a retrace down here. We've had a bit of this pump up per the recent strength from Aussie dollar. We had some of the data out last month that was okay. It wasn't amazing, but basically there was no bad entities in the data, right? So therefore, Aussie has driven higher. Since then, New Zealand dollar and Aussie dollar are always basically in the same basket, with a slight difference. For now, New Zealand dollar should strengthen. Aussie dollar comes lower, and therefore we get a drop down to here of 108.14. That's what I would say per the Aussie New Zealand dollar, right there. So. But yeah, we've had a clear pump, clear retracement. We're looking to pump lower. Basically where that is. We're now testing this kind of lower band that we've had in this structure, and clearly wants to break a third touch, right? And you drive lower. I would say 108.40 is probably your target right there. So yeah. Oh, it is a lovely pair, but hey, Australia, New Zealand, Aussies are kings. So there you
go. With the app, I didn't know there was a Fivers app. Fresh butter. Do you mean MT5 app? I'm assuming that's what you mean. That's the only thing I can assume.
No idea.
Ryder, if you want to sell gold, mate. Nobody's stopping you. As we always say, guys, please don't get drawn into FOMO by random people in the chat saying sell this, buy this, do that. Follow your own strategy, follow your own trade ideas, and you'll be golden. All right.
I would not be selling gold right now. You will not be golden, Mike. If you sell gold right now, you will not be golden. To be honest,
I'm not in any way, shape, or form looking to sell gold. Not a chance.
I mean, you got to consider, like, dude, we've ran down so hard from here, right? So that's right from 34, 38 at the tops. The spike low for the open today, 33.11. If you consider where we really traded, 33.30, called that. It's still $110 per ounce for gold lower. So that's quite a bit. That's like 3.5%. Right. So it's a fair shot that we then get a retracement higher from here, make it back up to, say, that 33.70 level, and then have a consideration point where we come higher or continue back lower, right? But betting on further shorts from here would mean that everything's golden. You know, Trump has pulled away his tariffs. You know, there's no Israel-Gaza war. Russia and Ukraine have made friends. Everyone's all happy. And, you know, it's all good. But I don't think that's happening right now. So I would say, yes, we probably got to drive higher. You know, per the current state.
I'm not sure we're going to go to all-time highs, though.
No, not at all. Not at all. I actually don't think we will get all-time highs this year. I'll say that later. I don't think we'll make that. Yeah, I don't think we'll get there at all. I think we'll range between 3,200 to 3,440, call it, and go back and forth, and potentially drop below that 3,200 and go to 3K.
Yeah.
Right? I think there's a high probability of going to 3K and below 3K, like 2,900, rather than going to, say, 3,600. Because we've had all the craziness, all the chaos, even with Israel and Gaza, that's kind of chilled out. Russia, Ukraine, that's kind of chilled out. The Iran situation, per Israel and the greater UAE and whatever, has kind of chilled out.
I think it's
had
important.
The bond market chill out.
I think it's important to caveat what you're saying, though, is that when you say chilled out, I think it's important to say that it's not that everything's fine and dandy, right? You know, in each of these areas, everything is still ongoing and everything is still to be resolved.
It's a relative basis, right? Like per the potentialities, right? Potentially what could have happened, we've pulled back from there. Same with the tariffs.
Yeah, right? I think it's more to the point that the market has now priced in all eventualities.
Yeah.
Right, and has now become less reactive to those bits of news. Right, those bits of news aren't until something drastically changes with any of those. That's why we're seeing gold in this higher range, let's say.
Yeah. So we're not getting chaos. We're not getting calamity. We're somewhere in between. We're still working it out, but it's not going to be fatal, right?
Yeah.
So at that point, eventually everyone gets saturated on the headlines. You go, okay, yes, this is happening, that's happening. We heard that 6 times the past 4 months or whatever. At this point, you put it aside. Time ticks on. World keeps turning. Economy keeps turning. You got to put money somewhere. It keeps going, right? So short of, all out boots on the ground war, I think we're in that position where gold consolidates this higher area and then potentially comes lower outside of that. So
Yeah. No, for me,
I've had dollar yen just tank just now, just by the way.
all right.
Yeah. So I think we're getting that reversal in the dollar complex. That's just dropped off a cliff right now. Euro dollar, that's helped it find a base.
Yeah.
Right. We got. I still favor the Aussie dollar overall. As far as general strength, per the dollar complex. So I think this guy we run higher. I feel like that's a pretty safe kind of bet, and per the construction, like that looks way better than euro dollar. If you look at that versus euro dollar right now, not as convincing.
Trump has just said he's very disappointed with President Putin, and he's reducing the 50-day deadline that he gave him. That's just come out of him. Financial juice.
Well, that's the worst for the pound. So worse for the euro. So pound ripping, pounds up, Aussie dollar up, dollar yen, mega down. Look at the DXY. Gotta say, for today, I feel like that kind of caps the Dixie through here, right? And now you got to retrace into these kind of levels. So where we are now, 98.22 comes down to 97.95. Relative move on the euro would be plus 25 points for that as well. Currently sat at 51, 52, 50, call it. Got to move up to 70, 75. That would be roughly here. I feel like that's a pretty fair move per that, right?
Just want to put out this comment because I know we've only got a few more minutes left, but this comment here: I'm not in gold, but the rationale for short is the fundamental rally in the dollar this morning, and more retail traders are long gold here. There's a few things. First of all, the gold is now, the dollar, we're now talking about it coming off, right? That's the first thing. Second thing is, everyone in this chat has all been questioning why are we in buys on gold. So the comment that retail traders are long gold here, based on the audience here, everyone's saying they're shorting it. So if you're talking about which way you're going for the retailers aren't longing, the retailers are shorting. But that's just anecdotal from what people are writing in chat. But I wouldn't say that that's necessarily a reason for shorts.
No.
Yeah, quite possibly. But yeah, I think the way that it's those 3-minute candles that I was looking at earlier.
Yeah.
We had this 3-minute candle here, right? And I was like, look, it's reacting all of this structure here. What happened? Immediately got blown out of the water, and it's now gone and broken out of this downward trend line on the lower time frames. It's not doing it very quickly, but I do still believe in buys on gold. Happy to be wrong, but I just feel as though the buyers are going to be taken over. So we'll see. We have got Dr. Deanna Cole back with us again. You guys are in for a treat. You get Deanna twice today. She was up early doors trading London session with Dirk, and she's back with us again in a couple of minutes. But as for myself and LJ, we'll be back again tomorrow, 12 o'clock UK time, if I'm not mistaken. So yeah, we look forward to seeing you guys then. Otherwise, trade safe, and Dr. Deanna will be coming up next.
Okay.
Hello, hello. How's everybody doing? I am trying to get my correct screen up here, and I am still, let me try one more time here. All right, there we go. There we go. All right. Everybody see gold? Yeah, there we go. All right, how's everybody doing? Still a lot of activity in the chart, in the chat. Good to see everybody. Hello, Lewis. Welcome back. Swing trader only. Yes. Thank you, Steven. Good to see everybody. All right. So I was listening in the background, and it sounds like Mike and LJ are kind of saying the same thing or similar to what I was thinking on gold as well. So I still have my gold trade marked out here. And it's interesting. We have kind of a different way of saying the same thing. So that's, we talked about this with Dirk this morning, looking at gold and talking about how on the daily chart, even you can day trade from the daily chart as well as lower time frames, but just looking at how price took out this previous day low. Not only that, but we got a bonus swing low taken out as well. Price moved below and then pushed higher and is residing sort of, above the previous day low and also the swing low. So for me, I'd be happy to get into gold anywhere, even a little bit closer to down here. And I agree with them. I think this could be a move higher. Now, no trade is a guarantee. Nobody knows what the market is going to do. But from a probabilistic standpoint, this is a trade that makes a whole lot of sense. And like Mike said, happy to be wrong. Of course, I'm not happy to be wrong, but I totally recognize that it may work or it may not work, but this is a high probability trade. So that's what I am looking at. Hi, Marina. Welcome back. Good to have you, Silvietta. So good to see so many familiar faces. All right. Absolutely correct. New York will show it soon. I didn't see what that comment was, but that's what I'm looking at. So it's been interesting to see the move in the S&P as well. So also looking at the S&P, and this is the daily chart as well. It's not really a surprise at all. Price is way up in the sky, and this is a good constructive thing for price to move back. So if you are trying to go long the S&P, you want to see it correct a little bit. So we have this opening gap that price is just now coming into. So price opened, actually, let's take a look here where it opened exactly. So right now, price has come back a good amount inside that that open. So here is, the opening gap. This is where price, let's change that to a different color though, so that we can see it a little bit more clear as a gap. And we know that most gaps tend to get filled, not always. We have a couple daily gaps that are still remaining. So a gap is not always filled, but most of the time it is. So as far back as, in fact, we can just add them on here. Here is a gap that has not been filled, and this has been from quite a while ago now. So right here, this was a weekly gap. So this is a Friday and this was a Monday. And then we also have a midweek gap as well that has been partially but not fully closed. So this was a Tuesday into a Wednesday. You can see the gap here. And price on that Thursday kind of dipped into it, maybe just less than halfway, maybe a third of the way into there, and barely tapped into it here, but never filled those gaps. So again, most of the time gaps are filled, but that is not a sure thing, but it is a high probability that that will happen. And it's also very constructive. So if we get a gap fill, that can set up a good move in the S&P. And, this was kind of an area that I marked out back when we had this, where price, just like we were talking about on gold, where price dipped below the previous day low. Actually, the 2 days prior, no swing low in this case, but dipped below and then pushed above. And so I had kind of drawn out, what does that look like? So at the time, it was based on this. It's basically an extension here. So it was based on this candle here and looking, or sorry, these two candles. So this candle here, because it cut below the two lows, and then the prior swing high. At the time, this swing high had formed, and want to be super aggressive down here, slightly less aggressive, but still aggressive here, tapering off here, and like very cool, calm, and collected up here. And now you can see we are way, way, way above that. So a nice correction could set us up for opportunities again. So Fabian, welcome. Good to have you here. John, I am. Are you talking about, am I in buys for the S&P? I have some long-term or longer-term holds in the S&P. I do not have any trades on the S&P yet today, but I do have a buy in gold right now. Same trade that we just talked about, move below the previous day low and a swing low, and then is above that low and hanging out in this area. Even if you look down to the hourly, you can see this is what it looks like. So we had this opening gap to the downside, the reverse of what we saw in the S&P. Gold gap down, nice rejection wick, moved higher, kind of came up and then pulled back into that region. So perfect place to get long. And I am holding the trade long. So the idea would be to sell most of the position, at a reasonably close target, and then hold a runner if gold wants to push higher. All right, looking at gold to take the 3,500 high, possibly. Hello, born in 2944. I'm doing well. Good to see you. Definitely a swing trader. Yeah, I combine swing trading and day trading. Again, we talked about this in the earlier session. That is sort of a Fiverr's cheat code. So most firms, funding firms, will have you restrict you to day trading, and the Fiverr's does not, which was why they were my first choice when I started with funding companies, because you have the luxury then to get in a position, day trade it if you want, but leave a little bit on and let that turn into a swing trade to really capitalize on big gains. Or you can just straight swing trade whatever you want. And we had talked about earlier, Michael Katz, the CEO of Trade the Pool, has talked about he'll position himself in a position, and then, days or weeks or whatever it is go by, and he will get an alert or a notification that he is past the next level. That is such a luxury to be able to hold, and just, you don't have to be as precise as you do with day trading. You can have a regular full-time job or be a busy mom or dad parenting your kids, and it is just a much, much easier way to trade. So it's underrated. I don't know why, but for some reason it seems like in the last couple years, day trading has kind of like been held as like a better way to do things, or like a more sexy way to do things. And the reality is, I think swing trading, at least to some extent, is really a great addition to that as well. So, and you can do that in one account, swing trade and day trade. And I see Victor is joining us. So come on in, Victor. Welcome.
Hello, everyone. Hi. How is everyone doing? It's Monday the 28th, first day of the week. I hope everyone is doing fine. Deanna, how are you doing
I'm
this
doing
morning?
great. Great.
This
How are you, Victor?
I'm doing great. I was actually just hiding in the background, but you caught me. You really caught me. Um,
Good to have you here. Good to see you.
thank
I
you.
wasn't sure if you were coming or not, so I'm glad you're here.
Yes, I had some difficulties connecting, but it was all my fault. So I thought it was something else, but it was just me, you know, messing around, and I couldn't
It's
get in.
Monday.
Yes, it's Monday. It's normal. I mean, we're all humans.
Yep,
Um,
absolutely.
so I see I see we have a group. What am I saying?
Your
A
mouth has the Mondays too, maybe.
Yes, it seems to me like yes. I see we have a group of people, the regulars ones in
Yeah.
our chat. Vinicius, Louise, I'm sure you guys have been. Marina, Timothy, I'm sure you have all been here already since Deanna is already, was here already. But I thank you for saying hi, and I say hello to everyone, including and especially those that I just mentioned. You're looking at gold on your chart. Are you specifically looking for a trade, or have you had a trade on gold, Diana, today?
Yes, I am already in a gold trade, and as always, not financial advice. This is just what I'm doing, but I'm happy to share. And just a quick shout out to Vinicius. I didn't see you. I was scrolling back a little bit. So now I see your comment. Hello and welcome. So, yes, this is what I'm looking at in gold. And this is, this would be a day trade, but you can also do it as a longer term trade, depending on what size and how you want to hold your trade. So, we had talked about here what we've been talking about a lot lately. When price comes below a prior day low and then
Mm-hmm.
pushes above, starts to reside in that little box area above. This is just sort of, maybe this is even a little bit wide, but price has definitely been residing in this level. If we drop down to the hourly, you can see it even clearer. We had price gap down, strong rejection higher, push up a little bit, and then is kind of coming back in. So even in here, now that price is moving down, that could be an area. Again, it's a high probability trade, so it's not a guarantee. There are no guarantees in trading. It could very easily fail depending on the market. It could be a failed trade depending on where you put your stop and your profit target. But from a probability standpoint, this setup is definitely what I would consider to be high probability. So not only did we get a push below the previous day high, but we also have a swing low here that price also took out the swing low and sucked up all that liquidity and then is pushing higher. So just to reiterate, a swing low is a low that has a higher low on either side. Sometimes people require 2 or 3 candles. And so this is actually a really strong swing low because you can see this low here. We have 1, 2, 3 candles that have progressively higher highs, and same on this side. 1, 2, 3 all the way up there. So that is, a strong swing low. I only typically require 1 on either side, but everybody has a different standard for how they look at swing lows. So, again, high probability trade doesn't mean it is a guarantee, but I think LJ and Mike had kind of a similar analysis, a different way of looking at it, but kind of the same outcome. So, what about you, Victor? What are your thoughts on gold at the moment?
I was just looking at the asset, and we are back in a fresh order block on the daily. I was going to show it on my chart, of course. It is already on my chart, but let me show that to everyone. Let's see. We have there we go. That is not my. I haven't. I haven't.
You got the Mondays.
I got the Mondays for sure. Of course, I gotta share that first. Looks like I'm the first time I'm doing this.
No, that's okay. Just getting into it again.
Yeah, no problem. Apparently, I relaxed too much on the weekend, which is a good thing.
That's
All right,
great.
let's look at it. Is I had a great weekend. But anyways, that's beside the point. Let's go back to the chart on gold. Gold on the higher time frames, there isn't anything to be said other than we can see that we are compared to before, right? We didn't have many places on the monthly where we had bigger or more significant, more visible upper wicks. We can see that that is the case now. We are 4 months already where we are creating, bigger than previously, right? That's a change in market condition. That's something to take into account. What exactly means it? It means it depends on what else it is showing, or what is the context. And for that, we need to go to the lower time frames. We're still in an uptrend. We discussed this before. There isn't anything for us to see on at least through the eyes or the lenses of the order blocks and the quasis. Yes, we do have a bullish structure here, but that already did its job, which is this swing that we saw. That, to me, that's it, right? Once it does the first swing, that's the first attempt, or that's the first retest, and that's it. I don't use it. I don't. It's not a signal anymore, or it's not a component anymore of my system. Even though I understand that this structure can still function as a demand area and still will, as long as it is valid, it will have, to some degree, a demand area effect, right? Although it's going to be less because it already had its first one. So there isn't anything on the weekly that is relevant, but on the daily time frame, we still have the bullish quasi, which is the one that I favor. Why? Because the higher time frames on gold has been bullish since, for a long time. Not only because of inflation, you can go back and it's, there's that positive drift as well, as we talked on the equities. You have that on gold as well because of inflation. Inflation is, always present almost. So you're gonna see that effect through time. So that's one thing. But the in terms of the market structure, it's been very, very bullish. We don't have to look at a chart to know that. You see that on the headlines on the newspaper or websites on the news sources, and just look around. I mean, we have conflicts and all those conflicts around the world that we know that impulse gold to higher levels. So that's one thing, right? So on the backdrop of the positive, the bullishness on gold as an asset, we have a bullish quasi. Even I don't normally, especially on forex, I would be extra cautious when you have a bullish reversal pattern at the top or at the end of a bullish leg, right? Because at a bullish leg, we expect, a reversal to reversal to some kind of a mean, and you want to be looking for a bearish reversal, not a bullish one, right? So that's one thing that we have to keep in mind. But we do have this nice weekly, actually daily quasi established downtrend, break of the neckline. That is the neckline. That's the left shoulder, the head, break of that neckline, and it comes back to one of these two order blocks. On the bullish side, this one is part of a bearish structure. So let's disregard that for a little while. So we have these two areas. We came back once, twice, three times into it. But the rule about the number of attempts, number of retests, only applies to fresh order block or regular order blocks. This is an entry order block on a quasi. We have to, treat it differently. Those rules do not apply. They do apply in the sense that the structure will get weaker, but it will still be good enough to trade, right? So in the end, they're not apply. They don't apply. You're still able to take a trade from this structure, meaning that daily order block where we are coming back to, we haven't reached that yet. So on my mind, that already is a reason to wait a little longer, because I expect price to perhaps needing to come back to that area or very close to it before moving out. That's the bullish idea. And I've seen Deanna, your setup is a long on gold. That makes a lot of sense to me as well. And we have this fresh order block. Look at this. We have an order block which is on top of the entry order block on the quasi, right? Of the quasi. So we have this is 1, 2, 3, 4, 5. That's a perfectly fresh and number of candles for this to be a fresh order block. So we have a fresh order block right below us, and we have a entry order block, which if they were to get triggered, will make the signal even stronger to me. But I have already enough reasons to start looking. So I understand that I want to. It would be even better if we actually get a that price comes back to that area. But I mean, currently we already have reasons to expect price to not expect. Already have
Yeah.
not reason, but I mean, to me, already have my green light to go in. So that's on the.
That's
Go ahead.
interesting. Oh, sorry. I'm sorry. I was just curious. So you had said something along the lines of like, this is a good opportunity and this could be a better opportunity, basically, like if it goes deeper in. Is
Yes.
that something that you would take an opportunity when you see it and then be willing to, if you were to get stopped out, take it again lower? Or how do
Yes.
you bigger
Yes. That's it.
size, same size?
Well, because we are already in an entry and in a fresh order block, I have satisfied on this time frame my alignment. That means that I can take the trade if I have alignment all the way to the minutes to my entry time frame. I can use that data because we do have a daily reason, a daily green light. But I do understand that there is a structure lower. So if we don't get, if I get stopped out, just as you asked, I will take it again for sure, as long as we have another alignment, meaning another structure that is still aligned with the H1 all the way to the minutes. It will not be bigger size. My size always depends, is a fixed fractional risk always, meaning that the percentage of the risk is always the same in terms of percentage of my available risk capital, right? Because available risk capital is the actual equity that is available to us in terms of drawdown, right? So it's always a fixed percentage. So I don't size up, I don't do anything in that regard. And the size of the lot size will depend on the distance of the structures, because those are where I put my stops. It depends on on the order block. If it's a wider order block, I'll have a wider stop. So the size of the position will depend on the distance to my stop loss, right? So regular position sizing technique. So in terms of risk, it's going to be the same. So we have the order block right here. As we said, so I already have reasons to use this as a signal, or as a component of the signal. And if we go to the H4, we do see, what do we see there? Right, we do have a fresh order block that is currently at this moment being retested. So that is one thing. And if I look, is there any quasis? There isn't a quasi here because this point is higher on the H4. This point is higher than that, and that breaks basically the fact there isn't an established downtrend. There isn't a downtrend. So I'm going to be looking for this H4. That is the area on this time frame. And if we go even lower, let's see if we can get a quasi. We don't have anything here. Actually, we do have it's not a quasi, but we do have a fresh order block. So this area looks, it not looks, but it is enough for me to take a trade from. And let's see if we have a signal on the lower time frame to take the trade. So I am getting ready for a long, but I don't know yet if it's here or a lower. That's on the H2. On the H1, we do have a quasi right there. This is the left shoulder. See that? That's the left shoulder, the head, the break of that neckline. Let me mark that for those quasi lovers out there. I'm getting all the time fan letters of those quasi lovers. I gotta hire someone to read all those emails. Let's see. H1, we do have an area. The H1 doesn't really, in terms of the quasi, We do have an area here, and if we expand that, actually we have two. Okay, that's fine. I like that. We do have two structures. That's H1 and another one here. These are the areas that I'm going to be trading, right? And because we have H2 in the upper region as well, I'm interested in the first one, although it looks like it's not going to hold, and that's just fine. I don't mind. I just follow what price is doing, right? I don't try to predict anything. See if it. This is telling me very clearly the order block is not being respected, at least not right now. Look at that. Where's the demand coming in? It's not happening at the moment. And if that's any indication of what's to come, then it looks like it's going to break. But let's hold our horses and get in to see on the lower time frame if we get a reason. This looks very, very weak. This is how price action looks when it's going to break down. So I'm gonna just go to the lower time frame. Let's see the H1 and see if we have a quasi. We don't yet, so there's nothing to do. But that's the idea. So I have reasons on the daily time frame already to have a swing trade or a day trade that I can potentially take on as a swing trader. And on the lower time frames, I don't have that price action reversing yet, but I do have one area currently where I'm looking at, and also there is another area here. I don't like the fact that they're overlapping. When you have close areas that are overlapping, the best thing to do is to take the extreme, like the last one. In that case, would be the lower one. Although this one has better in terms of confluence, has more overlaps than the other one. But I mean, we just do whatever the price action tells us. If it wants to go to the next one, then this no longer is. It's already touched it, so I'm gonna move it away. I'm gonna be looking and change my area because it activated the next one. So that means that this is going to be my area. And let me check if that is a valid area in terms of the width of that structure. It is six. Was it? Yeah, $6, which is, yes, that is for sure enough. So I'm going to go to the lower time frame to see if, only if, right? For everyone who's watching this, I'm a reversal trader, not necessarily a contrarian, although on the lower time frame it's going to be a contrarian trader, but it is following a bigger move on the higher time frame. What we're looking for is that quasi that we still have on the let's say I'm looking for the daily basically to come in alignment with the lower time frame. I mean, to come in alignment with the this is the biggest, highest time frame structure that I'm trading, which is a quasi, and it already used it, but since it hasn't taken out this high, I can still use that because it is still in progress and it hasn't broken any structure, meaning it's not telling us that the quasi is getting weaker necessarily, just coming back to mitigate the last structure, which is a bullish sign as it moves out, because this is how market, not always, but very often work. Not necessarily in those swings, but roughly, right? Once it makes that reversal, it makes higher highs and higher lows as it goes out of that, and creating or completing the quasi. So I'm looking for this reversal point, and we do have those structures. And on the lower time frame, I'm just waiting for price to give me the sign, and it haven't given that to us yet, that it wants to reverse. So I'm gonna be waiting for that to happen. That's that's my view on gold. It is. Are you guys already in? I mean, Deanna, did you guys
Yeah.
already take? Okay.
Yeah, I have a small position in gold. So we'll see. Like you said, the price action right now is not looking so hot, but to me the
Mhm.
trade isn't invalidated yet. So
Okay.
I'm still in gold, but also noticing, my primary asset that I trade is the S&P,
Mm-hmm.
and starting to see the S&P perk up a little bit after just about filling the gap. So we had that big gap from overnight, and it hasn't quite filled it, but I would say probably 80% filled now, something like that.
Okay.
Maybe even, yeah. So I'm still bullish on gold. Definitely like this price action, and specifically what is happening on the daily chart. This is a little pullback here, so depending on how long you're looking to hold it, might dictate where your stop is. But for me, it still looks pretty good on the daily chart.
Yes, it does. I do agree with you. It is. I think it is a great area to reverse from. The only thing is, I'm still waiting. This is on the 5 minute as well. I just while you were talking, I refined the analysis, and on the 5 minute, I have actually a quasi. So I have another reason to look for this. It's quite wide for a 5 minute order block. But it is what it is. I mean, sometimes the order blocks are smaller, tighter. Sometimes they're wider. They're just a reflection of the volatility of the price at the time that these are created. And we just have to look, right? This is the order block, which is the same area that is also an H1 order block. So that gives you already, that tells you how wide it is on the lower time frame. But I'm looking for whenever price tells us, as it got into that order block, that it wants to reverse. Only if, right? I'm not going to jump the gun. I'm not going to get a trade in, even though I have this tool in, as if I'm getting ready. Well, actually, I am getting ready, but I haven't pulled the trigger yet, so I'm not in the trade. I'm just waiting and seeing if price wants to, if the pattern is real in the sense that it is visible, it is something, it is reflecting the psychology of the the masses, the market participant, then it has a good chance in reversing from this area. And if it's going to reverse, I want it to show me first. It's like in that movie. How is that, the Tom Hanks, not Tom Hanks, what is it called again? I think it is it's the movie when the Tom Cruise comes in, and the girl says, "You had me at hello." You remember that movie?
Yes, I know that movie. I don't know
I
what
don't
it's
know. I
called.
don't remember the title, but anyways, in that movie,
Somebody
right?
will tell us in the chat.
Yeah, they will tell us for sure. Those whoever likes this very popular movie, of course. And there's a line in there where Tom Cruise, which is the sports agent, talking to his client, which is the sportsman, and the sportsman is telling his agent, "Show me the money." Right?
Yes,
And
that's
Tom
the
Cruise is
famous
trying to
line.
tell him, yeah, do your best, come to the show me the money, yeah, confirm me with actions, with evidence, then I'll come. That's what
Mhm.
the movie is about, anyways. But in this case, I'm telling the market, show me the money, right? I want to see the reaction. I want to see the confirmation, right?
Mhm.
If the market doesn't give us anything, I'm not interested.
Mhm.
That's my mentality. So I'm telling the market here, show me the money. Show me the money. Only if you show
Good
me
policy.
the confirmation, then I will Jerry Maguire.
Yes.
Yes, that's the one. Thank you. Thank you, Lil Sid. Sam as well, and perhaps many others. Great movie, by the way.
I haven't watched that in years. I should not I might see, now I need a weekend so I can go watch it. I'll forget by next weekend, so
I'll send you a reminder.
yeah, good idea. Good idea.
Yes.
Well, and if
So
for
go ahead.
anybody who looks at, I don't know if anybody looks at range bar charts, but looking at ADX on the 80 range, gold is still really low on the ADX. So although in the short
Yes.
term it's pretty bearish at the moment, on the longer range it is still quite low. I'm not sharing that chart right now, but
Oh,
I'm looking at
okay.
it on another screen, and it is quite a bit. I think it was 10 is what I'm looking at.
There was, yes, that's the ADX you mentioned, and also we can take a look at. Let me get this out of the way. We know there is a lot of traders, a lot of viewers that are trading gold. Gold is very attractive, very attractive for traders, and we understand why. I mean, it's a beast. It's very beautiful, but I mean, you gotta know what you're doing.
Yeah.
You shouldn't be playing with gold, or you shouldn't. It's like a bull in those arenas. Those old, nowadays they're controversial, but these arenas, right? You have the matador. Well, to me, gold is the bull. You gotta hold your eyes on the bull, because you don't never know when it's gonna come raging at you.
Right.
Anyway,
And the truth is, gold does tend to trend very nicely, but it has not played very friendly recently. If you saw the chart that we were looking at earlier, where I kind of drew this like cup with handle, and then the handle is kind of getting very, it's like a almost like a sauce. Isn't that one too, where they call it a cup with or a no, that's a saucer. Never mind. Anyway, it has been messy, and there are times in gold when the trading is, I hate to use the word easy, because trading is never easy, but easier. Where gold just, trend, and then switches trend, and then goes that way for a while. This has not been easy since about April. In my opinion, this has been very, very difficult to trade. And, easier times will come back in gold, but this might not be the asset to focus all your chips on at the moment, because it has been really difficult. Although, again, this is a high probability setup still. So it's not that you shouldn't trade gold. It's just, it is a little bit tricky.
yes, Vinicius has always these wise words. We need to get the bull by the
True.
horns, or he will get us. That's exactly what I think
Yes.
about. That's the same thing I think about gold, Vinicius. You're absolutely right. If you wanna be able to play the game, you gotta watch the bull
Yeah.
in the arena. Don't let the bull unattended.
Mm-hmm.
It's similar as luggage on an airport. You gotta be there. You can't let it unattended.
Mm-hmm.
You're gonna get in trouble. All right. So what I wanted to say was on gold. Today is only Monday, but today is a big week, right? We have NFP. That's the biggest one on Friday. But we also have the interest rate decision on the Canadian dollar. We have. Let me check the market here for a second. We have a FOMC statement, or the interest rate decision on the Fed. You have the yen interest rate decision. That's on Thursday. And tomorrow we have the JOLTS, the job opening. Today we don't have anything, according to Forex Factory, but we have plenty of plenty of events to make this a very explosive week. So keep that in mind, guys. What if this is just a speculation on my part? Nothing based on price action yet. But what if today we get some kind of a reaction, but this structure only gets hit on perhaps one of those major events, taking out everyone that gets in on the reversal maybe today? I could be one of them. And then to only sweep them maybe Friday, and then move to the upside. That's just one idea. I want to be prepared if that things like that can were to happen. I want to be prepared and not uh, be caught on off guard. And how do I do that? One of the ways is to be very, very careful on the risk when these events are coming in. Perhaps hedging. That's not something we talk about very often. I don't like to talk about it too often, because it's something, it's if you don't know what you could do yourself more harm than good. But if you can perfectly hedge a position before news, for example, you can still maintain that position and withstand the volatility. But it's a little advanced, so I prefer not to. I don't want people get into trouble with their accounts by doing something that I explained. But
So
anyways, Yes.
Victor, there's a couple questions about GU for you
Yes.
to take a look at GU. And then I also wanted just to address while you're switching over to GU, Jackson had a comment. What do you consider safer commodities / Forex to work with? That's a really great question. Again, it's not that gold should not be a consideration, but because there is an upward tendency in gold, just like Victor had said, and so it can be a really great asset to trade. The indices are always going to be my top pick, though. Again, because you have that little that cheat code, right? That we know there is an upward tendency, and that can be a really especially if you're going long only, if you're trying to eliminate some of the like challenges of it being a newer trader, I would focus on the indices and I would consider a long only strategy and try that for a bit. That's where I would start if I was to tell somebody what to focus on. What about you, Victor? What would you say?
In comparison to gold, many are safer in that respect in terms of volatility. Of course, you have the yen pairs like pound yen, and others, which are still volatile. And gold isn't the only one that is in that respect dangerous or riskier. But they fluctuate because sometimes EU can be very benign as well, and other times it surprises you, goes twice the range that you would expect on any given day. But I would say you if you have a if you check the ranges, right, just look at the ATR and compare them to each other and make that relative comparison, and that can already give you some kind of idea. You have these pairs like EG. Today is not one of those days, but normally euro pound is a very rangy market, right? Doesn't move a lot. You can see how it stays in the same range a lot of the time, and not very often has very directional volatility. But today is one of those days. Look at that, how big that candle is. And actually, it's at 150% its daily ATR, which already tells you, something fundamental, something systemic. Well, maybe not systemic, but something bigger than usual is happening. Because otherwise, you wouldn't see this kind of price action. I would say, look at the ATR and zoom out from afar to see if you can find. There are, for example, like I said, Kiwi Swiss, and you have Euro Swiss as well. They tend to be much more rangy, and at least to me, for a person who trades, reversal, that's a very, well, not a very easy, but an easier asset to trade, right? Because they tend to not go and not come back, meaning they extend but they revert before they continue. They revert, rangy basically. Even if they are in a trend, they tend not to go in a very one-way direction without any retraces. So I would say something like that is much better to trade. Not better. That better isn't the word, but much more recommendable for a beginner to trade, because gold has great opportunities. I think sometimes more than those slower pairs, right? More movement, more opportunity. But are you going to be prepared to catch all these moves? Sometimes they happen very quickly. Sometimes they're big moves. It takes a little bit more to trade them safely, or trade it safely. Gold, that is. So I would say those lower range, lower ATRs pairs. That's a great place to look for pairs that are easier, safer in that sense. All right, let's look at pound. I think it was Manish who asked to look at pound. And yes, actually, I've been in a trade. I was taken out on that trade. The long position, the swing trade position, the day trade already obviously got hit. The target was, I think it was here. I don't have it right here, but anyways, my intraday already got hit back then, and I had a huge trade um, towards the daily, but I did move my stop loss higher after a certain number, looking at the as a certain number of days, looking at the price action, and that has been taken out already. So I don't have that position any longer open. But the market has come back to the same area, so that's something I already got. That I didn't catch. Obviously, I didn't catch that the whole move. I got out on a trail, but we are at the same levels, and let's look at how that looks on the higher time frames. Do we have a weekly fresh order block? Yes, we do. Look at that. Very beautiful. That's this order block. We're retesting back. Let's look at the daily. We have a daily reason, right? We have a daily reason for price to reverse from this area. And the daily reason is right here, right? And what else do we have? We have this is there is actually a quasi as well. It's not important in this case to indicate because we have reasons on the daily, the fresh order block, and that's much tighter. I like that much better. The daily is up here, and that's the downtrend, the high, the lower low, and lower highs. And we had the first reaction, and we're coming back to the same order block that it was left behind, which to me is very, very attractive. So if you go to the H4, do we have a reason to take a trade from this level where that daily is? Yes, we do. This is the H4, which is, for my liking, too wide, but it is there. So I cannot deny the fact we do have alignment, and it does tell us on multiple time frames a line that we are getting into a place which has a good probability of a reversal. And if we go lower time frame, we don't have anything on the H2 yet, but we did get an outside bar on the H1. That's the kind of reaction you want to see when price gets to your level, right? Buyers coming in, it's a demand zone, right? So you want to see the demand coming in, and that's what creates these outside bars, that demand that just came in. So that leaves me with this order block. That's where I want, that's my area, that's my fishing area. That's where I want to see on the lower time frames, on the minutes, and you can, build a different system, and you can use whatever you want within this area to be a confirmation for you. But for me, I'm going to be using the same structures. I'm going to be using the same quasis that I use all the time, meaning this is the neckline. Very, very easy, and I'll let price come back to me. I'm not going to chase price. I think it's very interesting, but I'm not chasing anyone. I'm waiting for price to come to me, right? If it's good, it's going to come to me. This is the structure that I'm interested in. And if price, shoots without me, that's fine. That's someone else's trade. It's not mine. I'm going to wait for price to come there. At least on the 5 minute, that's the area. And on the 3 minute, we can find some more spots. As long as it is within those two horizontal yellow lines and below that retracement level. So that takes us to this. Actually, it's one big order block, not exactly the one you want to be seeing, because it's still about, 15 pips wide, which is tradable, perfectly tradable, but it's you won't get a very tight entry, obviously. So it's or unlikely to get that. Let me see on the 1 minute if we have something. We actually have on the 2 minute. Yeah, I think it is. This is the best one. There, we got one area here. I want to price come back to there to that level and see if it reacts to it. If it does, then I'm gonna be all over it. I'm gonna get into this position at some point. And if I get in, I'll tell you guys, not right away after the fact, but I'll tell you, no worry. Since this isn't a signal providing service,
Yeah.
so if I'm getting in, after a little while, I'll share with you guys. But those are the areas that I want price to come in and show me the money, basically, right? I want it to come there and reverse, make those phenomenon that indicate that buyers are coming in, that they're defending their turf, they're taking the overhand, they're taking control, and so forth. That's the whole idea. And if it does that, I would get in at, depending on the structure, have a stop loss below there. It's quite wide, very, very wide for me, but it is the valid place to place it. So it is what it is. And I would target, in that case, if I were to get in, I would target, let me check a couple of things. What would be targeting? In terms of the quasi on the weekly, we don't have anything. So basically, I would target the next structure above us, which is basically, I would target this. That's one of the a bit more conservative ones, but yes, I would target that one. That wasn't the right template. Neither that one, but it doesn't matter. Okay, so that would be one of the targets. And we can already see that there is a daily order block there. Yeah, I would just target the same thing again, same thing as before. So I would put my TP the same place. Considering the daily, I'll put it the same place. Let's see if we get anything. It's gonna take a little while, perhaps. We'll see. We'll wait for that to happen. Maybe I'll put not maybe, I will put an alert here, and it will alert us in time.
Well, and Victor, I love that you said that this isn't a signal service. I think that's that's the value of the stream. Hopefully, is all the information, all the internal thoughts of what you're seeing and what you're thinking is way more valuable than a signal, because every trader ultimately needs to do their own thing, because they don't have access to you 24/7. And so thank you for sharing your thoughts on all of that, because I think that is actually the value. In addition to like maybe compare notes after the fact, if you do end up taking a trade, it would be helpful to hear that back end analysis as well.
Yeah, for sure. We think that as a company, and personally, I really believe in that idea. You don't want to depend on anyone for your income, right? So you gotta learn how to fish yourself, and not depend on watching anyone else fishing at a certain place, and then, okay, if that person is fishing there, I'm gonna do the same, and hopefully I'll catch something. No, learn the skill to find your areas on your own. Watch us, and learn as much as you can, because that's the whole idea. The whole idea is to expose you to funded traders, successful traders, consistent traders, and hopefully some of that will rub off on you. Yeah, I think it's very important to, signal providing services is a thing, but this is not it.
Mhm. Yeah, and also, you can invest in other people's trading, but that's really not what we're doing here.
Exactly.
If you want to learn how to trade, that's something different, and it takes more than just knowing where Victor would get in and where Victor would get out. Although I do think it's helpful to it's sort of like when you do a math problem and you can work the problem backwards.
Mhm.
It makes it easier to kind of understand the next time you do the problem. Okay, now I understand how to do the math problem on my own. So I think that is the true value in everything that you shared with us.
Yeah, it's learn by watching, basically, right? It's giving a good example of things that you know took sometimes years to learn. At least to me, that what happened, and hopefully that will accelerate the process of others. If I had someone that I could watch that would trade the way now I trade, but I could watch and learn from, I think I could have, cut my journey in half at least, if not more.
Yeah. I agree. I think that's one of the hardest things about being a trader in this online environment, right? We're not in like a brick and mortar prop shop where you could talk to another trader face to face that has more experience than you. I think that definitely expedites the process, I'm sure, both ways, right? Weeds out some traders faster, but also can help expedite the process for traders who end up being successful. But this is the environment we find ourselves in, and we have to learn to cope in that environment.
Yes, for sure. And the market changes. The market condition changes. Your strategy will require you to adapt to future conditions. We don't know, because it's future. We don't know yet how it's going to be. And if you don't have the skill of system building, you don't have the discipline and the skill to monitor your trades and find out where. I think the GU already has turned and hasn't come back to the place where I'm expecting it, which is fine. I'll just recognize and you know recognize that either it's still gonna come my trade, or it's not mine. So I'm just gonna wait. I'm not gonna go in FOMO in, because there is a huge potential. Yes, there is, but only if it does what it's supposed to do according to my strategy. But coming back to what I was saying, I think it's actually I lost the line which I was gonna say. Pound distracted me. But anyways.
Well, you were talking about building systems and how
Yes,
in honesty, that's what you need to learn. That's a very important skill to have other than just
exactly.
being able to take somebody else's signal.
Yes, thank you, Deanna. Thank you for keeping me on track. The the market will, as a trader, nothing stays forever the same. The market doesn't do that. The world doesn't do that. You don't stay the same. The person you are today is different than the one you were a couple of years ago, or even a couple of months ago sometimes. And because we progress, we live, we have experiences, we learn. um, and the strategy, a strategy that is completely fixed, that has no adaptability, is not is it's difficult. It's already difficult to have a profitable, consistent strategy at any given time, in any moment in time. Now, to expect that to keep that consistency and profitability going forward, that's that's unlikely, right? So the market fluctuates, volatility fluctuates, and the edge you have in the market on any given strategy also fluctuates, right? And the ability to recognize, find, explore the data, find where the edge is, getting the think of ways to extract that edge. That skill is essential for your survival as a trader. If you lack that, then you're only going to last for as long as you're going to be at the mercy of the winds, basically, on the edge. Because as long as the edge is still there, you're going to catch it. But what if it changes? What if it fluctuates, and it requires you to have a different entry model to catch it, or a different trail strategy to hold it, or a different targets? That will happen at some time, I believe. So it's very essential, I think, if you want to be on the top of your game, to be able to have those skills as well, right? So it's not just one trick that you do, or one rule. Even though I live by these rule-based system, these rule-based system are based on the data, and if the data tells me something else, I'm going to change those rules. So it's not going to, they're not set in stone. They're set in stone between now and the next time I find a better way of doing it. If in 60, in 6 months, or 1 year, or 2 years, I measure something that my rules are not catching the optimal, they're not catching or extracting the edge optimally, then I'm going to be looking for that optimal, adaptation of my strategy. And that's what I believe all traders need to be able to do. So, and that you won't have that with signal providing services. You won't have that if you're dependent on anyone, to show you where to enter and what to do. You only want to use them as an example, and that's the way I recommend everyone to use myself or anyone you see on this channel. Use us as a blueprint, a template for you building your own system. Do not copy us like literally everything, but just test every component and see if it fits in your system. I think that's the best thing you can do.
I agree. I think you can take, I've said this many times before, but it used to drive me crazy when people would say, take a system and make it your own. And I just thought, you know what, I'll take any system that makes money. And if I can just get that, or I can figure that out, or you can tell me that, I'll be happy with any system. And the reality is that's just not how it works. Not only because you don't have access to the other person 24/7, but also there are things that would be difficult for you, Victor, and come easy to me, and things like that are easy for you and would be impossible for me. And that's just the way it goes. We talked about many times where we have different personalities, and like the precision spectrum, you prefer to be super precise, and I prefer a little bit more less precision. That's personality, and you can't help but do those things in your trading. And the reality is, of all the traders I've seen, I think 4 or 5 other different traders today, and they have all said, kind of on stream, they've all said things that make a lot of sense, and you can tell it fits who they are and how they're perceiving the world and how they're perceiving the market. There's infinite number of ways to do things, and it's okay to take things and make it your own. And so if you want to rely on somebody to take trades for you, then you're not really a trader, and that's okay. You can just invest with somebody, and that's fine. But if you really want to be a trader, then you have to integrate these pieces from different people that are coming forward and have had success themselves.
Yes, I think that's, at the beginning, you don't know your identity as a trader yet. In many things, not only in trading, but in many other activities, you don't know what kind of if you're, playing sports, you don't know exactly where your strengths are and what you excel at. So and if you don't have anything else, just, take any strategy and test it out. Measure how, if it is profitable, if you are able to trade it, and you start molding that idea into something that that fits you. And that's one thing. And if you find, don't be too scared to throw it away, right? I'm not talking about hopping, right? Hopping is, without even testing things, the moment it starts getting into drawdown, you throw it away. I don't mean that. But I mean, if you have a strategy and you go deep into the data, you collect, you back test it, you collect, you forward test it, and while you're still seeing some kind of good results, you keep on collecting, and you try everything to make it work. And if you're able to measure profitability in back testing, there are some exceptions, but you should be able to trade that profitably going forward as well. If you're not able to, then you should, revise whether it's the risk is correctly applied, and whether you are able to follow that because of your personality, impatience, emotions, all that, of course, your discipline. But if you didn't do any wrongs, you didn't do any mistakes, and your risk isn't an issue, then perhaps something's got to be wrong. Then perhaps the collection of data you have may have some bias into it. Right? We talk a lot about bias. Of course, I have a bullish bias, bearish bias. But what I mean is statistical bias, meaning that there is a confounding factor in the data, meaning that you think you're catching an edge, but that's not an edge. What you're measuring is just the trend, for example, right? You have a rule where you go long if it breaks the last high of the 52-week high, something like that, or 52-day, whatever it is that the strategy tells you, and you measure in 10 trades, 20 trades, it's very, very profitable. And you think, wow, this is it. But actually, maybe it was just one market that was going up all the time. And is it the strategy, or is it, just the market going up? So that could be a confounding factor. You have to apply the same strategy to a different market condition, right? When it's not trending, when it is ranging, when it is, different than the data that you have. You have to test out the data. They say out of sample, basically, right? So you have in sample, which is the strategy was based on the measurements, the observations that you did. That's one data set. Now you have to apply the same rules, the same system that you found within sample, apply to out of sample, right? Apply to a different set of data, different set of price, different perhaps even asset, and see if that strategy still is profitable. And if it is, then you actually has a very good chance that this system actually is profitable, right? So if you what I mean to say is that um, you should be able to do this process. Otherwise, you could be running in circles, thinking it's it happened to me at the beginning in 2009. I was trading, and I just started, and I was trading gold, and gold was going parabolic, and I was earning a lot. I made 36x in 11 months.
Wow, that's
And
incredible.
and I thought, I'm a genius. I'm
It'll
gonna
last forever.
this is gonna last forever. I'm just imagine if I can continue to do this in the next 11 months, I'm gonna be wow.
Yeah.
Truth is, it wasn't me, it wasn't my strategy. The market was going up, right? So there wasn't there was edge there, but what I was measuring wasn't the edge of the strategy. It was just the market going up. Anyone who would just throw a dart at gold long you would be a winner at the end in that in that period, in that run, because it was such a bull run. The only thing you could do to lose was to short it. Everything else, just going long would with some sensible risk management, you would be up in any case. So that's to me, those are the skills needed to uh, survive long term. You gotta recognize how to measure the edge, and how to adapt, how to build your system through time, adapt it, adjust it, and do this on a regular basis. Not too regular, but I mean,
Yeah.
at least once a
Repeat
year.
it. Yeah.
I don't play chess. I did
Yeah.
play chess. Actually, I play chess in high school, but I don't play. I don't. Usually, I don't play chess anymore. I haven't played in a long time. I used to play it in high school, but
But
it
he's
it,
still precise. He still likes precision to the point of
it
I always think about you with your measuring scale to get the 1 gram versus 2 grams of salt.
yeah.
So precision is definitely his forte, his strong suit, and also I think secretly your joy. I think you enjoy precision.
Yeah, I wouldn't. I would. It would be a lie saying otherwise. Yes, I do enjoy having this precision. Actually, it's something certain profession. It's not completely necessary to be very precise in trading. To me, that's the way I am. So maybe that's just an expression of my personality. Although I think it helps being good. Being very precise if you have a strategy that requires that. So, but it is, for example, there are other professions as well, like accounting, right? A bookkeeper. A bookkeeper, ideally knows every cent where it goes to, and that's a thought, or that's a mindset that I share. I want to know everything possible about my data. I want to know the stats on it. I want to see if there's correlation. I want to see, what the probabilities are. A lot of the times you can be precise with probabilities because it's only based on the data you have. But based on the data you have, you can infer some kind of probabilities going forward. And the more data you have, the better you can do this. I wouldn't say I missed it. I don't know about you, Burn, in the future, but I don't know. Maybe it is true, right? You missed your entry. Maybe you had a signal and you didn't take it. But to me, I didn't miss anything. I don't see it that way, right? If it doesn't come back to my area, if I were to think I missed it, that's gonna that's gonna make it more difficult for me to not, you know, not trade it, not get in with a far worse entry. So I like to think, and I truly believe that it's not mine. This is not one of those setups that I backtested, right? So it's not part of my system. So it's not mine. It's someone else's. When you think about it that way, I don't feel like I need to be in this trade. I don't want to be in this trade.
Yeah.
I only
And
want to be in my trade.
that's very FOMO inducing to think that you missed it, right? But the way that you framed it, Victor, is very what's the opposite of inducing? FOMO preventing or preventative, right? Because you're mentally framing it in a completely different way. It just
Yeah.
wasn't your trade.
Yeah, I actually I don't want to be in this trade. I have no desire to be in this trade if it doesn't comply with my trade plan because I only want. The thing is, Deanna and everyone watching, the thing is, once you have done, once you have the data, whether that be only backtesting or backtesting and forward testing, as I have, and you see the profitability of your system, you want to get that result and you want to maintain that result, and the only way to do that is by following the plan, like step by step. Price needs to do this and that. For example, it needs to come back to the area. If it doesn't come back, then this trade would never be in my data. It would never be in my data back testing or my forward testing. So it's not what I tested. If I take this trade, I will not get the result that I've seen, that I can get. So I do not want that result. I don't know what it is. I know it probably isn't as profitable, maybe not even profitable. If I want to have and keep my profitability and get the same results that I tested and with my data that on forward testing, I need to stick to my plan. There is no other way around it. Whenever I start doing some, funny stuff, I will get funny results. I don't want that.
Well, what do you think about this comment, Victor? I have an opinion on this one, but what do you think about this comment?
It looks like it's the only one today.
Yeah.
Yeah, I think that's perfectly possible. I have no. If I think I actually agree, it could be the move of today, and it's not coming back. But I try not to. It doesn't. It's irrelevant to me in terms of my strategy. If it is the only one, then I will not get in. And if it isn't the only one, if it comes back, then I'll get in. But it's not because that I recognize it or not as being the only one. That assertion or that observation is just it sounds a little bit harsh. It's not meant as harsh, but it's irrelevant to me. I do like to have these opinions though, right? But they're irrelevant to my trading plan. Like this is likely to be the last time. It's not going to go lower. It's going to hold. All of those are opinions, and I like to have those, right? They're observation and they're based on something. Maybe gut feeling. Maybe I've seen this many times. But my trade plan, my execution does not depend on these opinions, right? Whether it's going to hold or not. I have, in the end, we don't know, right? There, you mentioned that we have no guarantee. Nothing is 100% certain. It's just a matter of probabilities. But I don't. In my view, your plan should not be based on opinions. It should be based on data. Period. And the data tells me to act a certain way, at least on the way that I do it, very rule based. So if the rules are met, I get in. If they're not met, I do not get in. Whether I want to, whether I feel this way or the other way is irrelevant.
Mm-hmm. And my thought is just like we have no idea what price action is going to do. So we have no idea if it's going to be the only one today or not. But just like UK swing trader is saying, it's like buses. There's always another one coming right around the corner. And so if it's not
Exactly.
caught up, that's fine. It's let it go, move on. Another one will come. Maybe it'll be today. Maybe it won't be for 2 days. I mean, we have no idea. There's no way to know that, predict the future. We're not able to do that.
Actually, I like this analogy very, very much because if you just think of that in the real world, if you're traveling, if your destination is, let's say, a target on your account or profitability, ending the week in profitability, for example, that could be the destination, the analogy in this case, the destination. If that is the case, taking the wrong bus in real life, you have a chance of going farther away from your destination, further away from home, right?
Mm-hmm.
Home is your destination, and you only want to take the right bus, right? So if there comes another bus, but it's not the right one, I don't want to get in. You don't get in on any random bus either on when you're traveling, right? You're waiting for that specific one that's going to take you only if it takes me to home. Otherwise, I'm not interested, right?
Mm-hmm.
Same thing with setups. If the setup doesn't match your trade plan, that's the wrong bus. Wait for the right bus to come, and then you step in.
That's right.
Indeed. All right. So we might have the market has been very volatile actually today. Have you noticed any of that on your pairs that you're trading, Deanna?
Yeah, so I'm just noticing that the indices are just or the S&P specifically is what I'm looking at, is just getting
Mm-hmm.
very close to fully completely filling that gap. I mean, 875 was the top, and price went as low as, looks like, let me switch this here. I can't quite see, 30.25. So within a few points of completely filling that gap. So be interesting to see what price does now as we're approximately 13 minutes or so away from the New York Open, to see what price is going to do here. Gold is maintaining that right at that previous day low, so it's a little bit iffy with that one there, but still above the previous day low, so hasn't invalidated the trade yet. But we'll see. No high impact news events today on Forex Factory, but plenty of high impact news events coming up later on this week.
Yeah, I think it's going to be perhaps the week when, maybe the direction, maybe the structure will hold or not this week, and perhaps a little bit into the next week as well will be when that is decided, right? Not maybe it's not going to travel the whole range, of course, of the month, but it's going to be the direction, whether things break or hold, is going to depend on this week's price action. In my opinion, has a good chance of doing that. I'm looking at gold as well as let me see if I can spot it. I'm going to show you guys in a little bit. Just looking at what the price is telling me. All right. All right. It's been, I was going to say that the price, the volatility on price has been very, very. I'm going to show my chart here.
Mm-hmm.
Actually, I'm thinking of showing my my terminal, but I'm going to show my chart instead. Let's see. All right. So what I'm thinking of is we already discussed this on gold, right? So we're revisiting this setup. we had these two yellow horizontal lines where price is expected to have a, that's the quasi. I'm going to, point it out for those who are interested. Right? You
Sorry,
have,
Victor, to interrupt. It's still on my chart, so I don't
I,
know if I can change it
yes.
on my end.
when you mentioned that, with the corner of my eye, indeed. So yes, so this is the trade on the. We already talked about that. We have a daily order block, which is still fresh while it is being retested. We have an H4 order block that is being retested currently, and on the 1 hour we have actually a quasi. And you ask, where is that quasi? Well, let me show you where the quasi is. There, that's the established downtrend. That line is supposed to be there, but it doesn't matter. Let me mark that like so. So that's the established downtrend that creates this neckline. That neckline was broken, and if price is going to reverse from this level, then it makes sense for price to reverse from this is the last structure for price to reverse from, and we're currently in it. We don't know if it's going to reverse. Maybe it's going to go straight through it. And actually, that makes sense because, as we said, there is a structure below us that is this one, which is currently at 3,319.75, which makes, in my mind, a lot of sense for price to reach there before it actually has a meaningful and lasting reversal. But it can do whatever it wants. So I have enough reasons to get in, which is the H4 on the hourlies, even a macro, alignment, and we do have that quasi on the lower time frames as well. It is visible, that same H1 order block or quasi. I mean, it did give us an entry, which is on the H4 entry order block, I mean, and it is up to you, depending on your strategy, depending on your system, to read as price is visiting this area. If you find indication in price action that the buyers, the bulls, are taking over, because that's the sign, right? It cannot go higher unless the buyers take control, unless you get these bullish candlestick or maybe some kind of indicator that you have when you have crossovers, not meaning EMAs necessarily, but I mean, any oscillator that is able to find that turning point in where one side takes control could be used. I like to use price action because it's much more nearer to actual price. Indicates there's typically has a little lag, sometimes a lot, sometimes a little. But it's up to your preference. In terms of, it's up to you to find out, each one of you to find out if the reversal already happened here, and depends on how you define that reversal, right? Depending on the entry method you use for your entry, and you get it in whenever you see that, and you put your stop below these areas or whatever your system tells you, and you target for something relevant on this time frame. And the relevant place on the H4 would be this order block we see right here. That could be the logical place to put your stop, your target, I mean. Let's see, where do I have the target? I think I eliminated. Actually, no, I didn't. This is just an H4. Let's mark that. And if it doesn't reverse, or it stops you out, don't feel anything. It doesn't mean anything to you. It just means that the setup failed. It's not a statement of who we are or how good we are.
Yeah, your value as a trader or as a person. It's easy
Exactly.
to fall into that trap, though, to thinking like that, but you're absolutely right.
It's only an event, like many others, that is a matter that's subject to probabilities, right?
Mhm.
Just think about this. There is a probability that it's going to rain today,
Mhm.
or it's going to be sunny today. It's a probability, and if it rains, it doesn't tell anything about you.
Mhm.
That's the way you should see it. If it rains today, it doesn't mean I'm a bad trader. It has
Mhm.
nothing to do with that. Same thing as a setup being working out or not, a structure holding or not, it has a probability.
Mhm.
That's not a reflection necessarily of how you are or the values you possess as a
Mhm.
person or as a trader. Very important to detach from that, because if you start to derive your value as a person or as a trader, depending on your P&L, I mean, that's going to be very harsh on,
Mhm.
you're going to be very hard on yourself, because the P&L
Mhm.
goes up and down all the time. I
Yeah.
lose all the time. If I were to think, that's something, it says something about me, I'm going to be feeling very not so great about myself a lot
Yeah.
of the time. And that's completely unnecessary.
Right. Right.
All right.
It's
So
a
we,
really hard, we attach a lot of value to being right, and that
yes,
makes it really difficult with trading, because we feel like it means something about us, because we want to be right and we want our analysis to be correct, and that's just not, unfortunately, how the game works.
exactly. All right. So we have a little structure here on gold, um, where price did come in and start looking for some. It's an outside bar, so it is giving us the first sign of buyers coming in, but it actually has to confirm, right? So it's not like the very first thing it does positive, that means it's going to reverse. It has to fall into place with giving you the multiple confirmation that this is going to reverse here, and one of them could be like follow through, right? Having
Mhm.
this, you have an order block, as in this case you have price coming down, and then let me put it this way, something like this. That's what creates that order block right here, right?
Mhm.
And it comes back, follow through, yeah? Getting out of that structure, that could be a sign of the market confirming that that is a area you want to be getting into.
Mhm.
Let's go back to GU. Did GU come back to the place where we were expecting? The place is much lower, so we'll have to wait for price to come to us. And there's still 36, 34 minutes, not hours, minutes for price to come to us. Let's see. We'll see. I have no hurry at all. If it comes, then I'll take it. If it confirms, and if not, then we'll just let it go.
And on the S&P, the indices, I haven't looked at the NASDAQ, but on the S&P, price did fill that gap now. It is just slightly below the prior day high, so from Friday, and has fully filled the opening gap from the weekend.
Yes, let's take a look at euro pound, because euro pound has been tanking and is still tanking, still tanking.
Mhm.
This is huge. This is the daily. This is not the 5 minute or so. This is the daily time frame. Let's look at the ATR. Today the ATR was indicating 43.9, and let's measure this candle. This is an 89. Imagine that. Something that on average goes 43 is already at 89. That's more than 200%. I said not too long ago, because before we came on, it was at 150%, right? And already it is 200, right? That's a very uh, important thing. It means that it is moving very. You do have an order block here that is retesting. Let's see if we can find out, if we can get an idea of a possible area we could be looking where it is heading towards. Do we have a quasi here? Yes, we do. Actually, all the way from here, we do have a very beautiful structure. That's nice, but that's one. Let me measure if these are. There are. We have one here. Okay, two and three. Okay, so that's not a daily structure that I can trade. That's way too many. All right, that's a very strong move. I think it's interesting, because it's too early to say anything, because we still have plenty of time for price to uh, you know start a mean reversion move. It doesn't, it's too early in my mind to. It still has about easily 2 hours to go before it could reverse. But it could happen anytime. We're getting into that order block, as we can see. That's the last time we tapped into it. And now we're doing the same thing. So that's interesting. This is a more local order block. Let's see if I can spot something that makes sense to me on the H4, a much smaller one. Okay, so I see this. This is live. This is
Just
the way
something
I
here open to Victor. Just
20 seconds ago. I see that. Yeah. All right. So 2, 3. Yeah, this makes sense to me. Right. We do have an order block below us, but that doesn't have alignment with the daily, which is fine. I mean, it can still wick it, but it's way far away, very far away. So I'm going to be, it's not that likely that's going to be hit today. But this order block, and we are currently testing another one, which is this. It seems it's not going to hold, but it's still it has touched already the daily. Right, so we have, looking at it, let's do the top-down analysis. There isn't anything here on the weekly time frame other than a bullish market structure. The monthly it's the second read. Actually, it's more than the second retest, so I'm not interested in the monthly at all. The daily time frame is, so you have a weekly market structure with a bullish retest of a bullish structure, right? So we have it right here, a fresh retest or a fresh order block. This one is also still fresh. Yes, it is. So we actually have, this is a refinement of the bigger structure. I like that. And since we already touched it, we can move this away because that will be much better. All right, so we do have a daily area that has been reached. On the 4 hour, we have a quasi that we are currently in one of the three. It's not that great that the three of them are covering basically, a lot of the area. Not great, but it's still there. So I can use it. Let's see some other time frames we have. One. That is just the first one, and that would be the second one. Okay, so there are some nice areas here. Can I use this structure? It's already breaking it down, so that makes it even easier. Actually, let me check if this is valid. The high 44 and this close is 44.3. 1, 2. Yeah, this is valid for me. So I'm able to. These are tradable entry order blocks on the quasi. The first one has already been taken out. The second one seems to be will be taken out, but it's not over until it's over. We still have 26 minutes. But if it touches this area, then I don't want to be trading. If it touches, let me indicate it if it touches the H4, I don't want to be trading that order block right here, because currently that is the area that looks the most interested to trade. There, that area. So I'm gonna mark it so you guys know this is the area that I'm interested in. It has a good chance of reversing from here. It's already squeezing it, and if it touches the structure below, I'm not interested in this area anymore, because I understand that there's something else that it needed to touch, and that I want to be trading that structure that it needed to touch, right? So, and this is the second area that would be interested to trade. This is on a very extended pair. Yeah, that's actually, no, this is the area. Yeah. A very extended pair, 200%. It's ATR only on Monday. Very volatile that is. Let's go to lower time frame, see if we can find anything. And the lower time frame tells us there's nothing yet, nothing in terms of buyers coming in. That's just one straight line. That's nothing to buy there. Not on this time in any case. And on the lower time frames, we could start looking for a possible long. Let's see if it reacts to a structure that makes sense. Nope. I don't see anything except the quasi neckline being all the way up here on the 1 minute. Even on the 1 minute, it's very far away. So we'll have to see. This is EG, Euro Pound, doing 200%. It's ATR. And this cannot go on forever, right? It can still go further. This is not, I don't know where it's going to stop. But the more it is stretched, the more likely it's going to have to stop and retrace, reverse to some kind of mean, even if it's going to continue tomorrow or later on. It's unlikely to go on without retrace continuously the whole time. So that's interesting. That I like that trade. I'm actually in a trade on this pair. On a different strategy, but I do like this a lot. Okay, let's check the chat. See, Crazy Mystery says, let's look at gold. What happened to gold? Did gold react? Not really. Gold has tanked even more. All right, so there it is, right? Does this indicate to you, traders out there, use your skills, your price action reading skills here? Do you see any structure, any combination of candlesticks or indicators? Do you see any sign that the buyers are taking over? I don't see it.
It's a great question. It really depends on your time frame. So in the short term, the trade that I talked about earlier today has failed. So a short term, like a day trade type hold time, that has failed. I still the longer term trade has not failed, but obviously because price is back below that previous day low, it's not looking particularly strong. That coupled with the fact that looking at the S&P, price is starting to find support to some extent at that, the opening gap, I guess, bottom quadrant. And then the NASDAQ is looking even stronger than the S&P as far as it did not test all the way through that opening gap and is starting to reverse from there. So I would say it depends on your time frame that you're holding or that you're working with, but it's looking definitely weaker and weaker.
Mm-hmm. Yes, yes, indeed. The question is on that particular. According to my plan, I need to see the confirmation on because the structures that I have that marked on the chart are on the 5 minute. That means that I need to see the 5 minute confirm. Right? It's time frame dependent. So in this case, I want to see something, actually not just one thing but a couple of things on this time frame, and the question is, can you guys see that? Are you convinced? Do you have an indication, whether that be from your indicators, from price action, from whatever it is that you use? Do you have any indication as of now that the buyers are taking or have taken control? And that's the question, at least to me. That's how I treat price action. That's I ask myself these questions all the time, and I let the price action tell me if that's happening or not, using candlestick combination in my case, I don't use indicators as oscillators, but you could. They're just another way of expressing price.
Mm-hmm.
So I don't see that happening yet. And if anything, it looks incredibly weak because you do have this on this time frame, right? Look at this. You have a H5, not H5. This is a 5-minute order block. This is supposed to be a demand zone. What does price do? It price breaks it, close below it, right? Not only that, now the test is now this has become a supply area. It needs to, in order to take control, it needs to at least break this, close back above, and take up this high, right? That could be one indication that buyers are coming in, and it's not happening, at least not yet.
Mm-hmm.
We'll see. It can do all kinds of stuff, all kind of things. It can do even this and then come back to do the reversal, and this can be it could look very, very weak for quite some time to go, and then do some huge reaction, and then perhaps the entry would be much later, at the end of the London session, perhaps. Who knows? I have no idea.
Victor, there's a really good question in the chat that I think I would love to hear your answer, just below that one here. So why on seemingly good news such as the EU trade deal would euro fall so hard?
Let's see, where is that?
Oh, did I not highlight it? There we go.
Yes,
Sorry.
you have. I was looking at the chat, and it was in front of my my nose. Why is it? I have no idea. I think I'm not the right person to answer that.
Well, and I think that's truly, from a technical standpoint, that is the right answer, right? Like, it not only do we not know, it doesn't really make any difference. Because if you're trading technically, that's not really the name of the game that you're playing. Now, somebody like LJ might have a very good answer that informs how he trades, but typically the traders that we see in here are often kind of technical traders, and I would identify as a technical trader. I think, Victor, I would consider you a technical trader. And so it doesn't always make sense, but there could be a really good explanation. That'd be a great question for LJ. But for me, it doesn't really inform. But I guess you could say maybe it's positive news for the U.S. But also the indices are really extended, so I don't know. That's a good question for LJ, but for a technical trader, it really doesn't make any difference.
It's the same thing as whether I have my opinions, but I mean, I don't think I'm the best person to answer this, because my opinion may be as good as anyone, right? It's or as bad as anyone's. It's I don't have any special access to any special analysis or anything in particular, and if that's the case, then I wouldn't rely at all on what people like myself could say, right? It would be just an opinion of a layman. So I stick to what I know, and I trade I trade the plan. But I do recognize that if you were able, and I'm not one of them, if you're able to understand the fundamentals, right? Because the fundamentals, they drive the price. If you have a better than average understanding of what's happening, then I can surely see how you can change that, because that basically gives you a direction. If you're able to see that from the news, I still have issues with it, but I mean, there are a lot of people who are able to do that profitably. I'm not one of them.
Here's a comment here: nuggets of nonsense. I sold gold at 33.38. No one here backed me, and I think, good for you. That's a great job. I don't think it is no one backed you. It's just my like for example, for me and probably LJ and Mike, our trade plan just doesn't align with yours. There's always buyers and sellers in the market, and we're just not aligned. That doesn't mean we don't back you. It's just not that's not what my trading system says to do at that time. But that's not a comment on your analysis or anything like that.
Yeah, I mean, even if you could have, multiple system disagreeing with each other in timing, in level, in that direction, and the fact that they have opposing direction or timing doesn't really mean anything
Anything.
about the other one.
Right.
Exactly, it doesn't mean
Right.
anything. It's just a matter of it happened to be that way, right? There's that randomness in the distribution of the results we get from our strategy, and you don't know in advance if this one is going to be the winner or the loser.
Mm-hmm.
You don't, simply don't. And um, the fact that you have a signal from your system gives you some kind of probabilities, yes.
Mm-hmm.
But I mean, within the for example, I can go short on something while someone has a very valid setup for going short, and I go long, and we are both can be right and
Right.
or wrong. I mean,
Mm-hmm.
so it doesn't, in the end, it doesn't mean anything.
Mm-hmm. Yeah.
This is the area, and we are seeing here that the market did not look at that. The order block, right? That's what we talked about. Actually, let's look at from a. This is actually very helpful. Let's look at the order block, right? We created that order block on the 5 minute, and what did we do? Right, this order block was supposed to be a bullish structure, a place we come back to and price. It's like a horn, a sound that a trumpet will make to call all the buyers that we're now going to reverse. And what kind of price action did we find? What did price do? We created that order block on the 5 minute. This is the one, but still you can see price action. We go retesting. We had initial push, right? And that's it. From that came crashing down, and once it broke this order block, which is still extended, but it is broken, now flips to be a supply area. Price goes back, retests, and moves away. Very technical, nothing unexpected here. And this is this is one of the ways price is just telling us buyers are not coming in. The bullish structures it's supposed to use are being broken, and the break are being respected.
Mm-hmm.
I mean, it's there's nothing to buy here, right? Even though I want to buy, there isn't price action hasn't confirmed by the pattern that we needed to see that push that never came back. That never happened. So there's nothing here to be said. So we can go back to the second area. Let's go check that. I'm gonna move this away. Where's that second area? We had, oh no, the second area, yes, the second area is actually, it's the daily. We now touched on the daily structure we talked about at the beginning, Deanna, the daily order block on the daily quasi that I mentioned at the beginning. I would expect that to be needed, to be touched before we have if we're going to have a sustainable reversal, one that you would be able to see on many days, then you would want to see this structure to be tapped into. So let's look at that. Do we have reasons on the H4? We're going to do the same thing again, going from a top down, from the H4. Do we have a reason, right? This area, do we have a reason from the H4? No, we don't. I don't have a reason from the H4. This is not a entry order block on the quasi, this one here. So I don't have a reason. I have to wait. In that case, I have to wait. And there isn't anything for me to do right now. Just waiting to see if price is going to form another order block that I can use. This one is not useful if price is below it. It's not supposed to be below it. That's a sign of weakness. I don't want to be buying in weakness here. I want to buy when I get some dollar bills shown to me.
Mhm. Show you the money.
Show
The
me the
market will show
money.
you the money. Yeah.
What face is on the $100 bill, Deanna?
Quiz time. I don't know.
Is it the Benjamins or was it the?
No, Benjamin is oh gosh, why did you put me on the spot like that?
I'm sorry.
It
I'm
is
sorry.
Benjamin Franklin, yeah. It's Benjamin Franklin. I was thinking the 20 for a second, but yeah, it's a $100 bill is Benjamin Franklin.
Okay. Well, I want to see some Benjamins before I get in.
There you go. I also want to address a comment real quick. Nuggets of Nonsense said, referring to that gold trade, the chat said I was foolish. I did not realize that happened. And if that's the case, I'm very sorry. You know,
Yes.
I just think we all need to be sort of immune to that kind of stuff because everybody has their opinions. We all have, you know, different opinions, and it really doesn't matter what, you know, even coming here and listening to what Victor and I think, you can absolutely take the opposite of whatever Victor and I you know, say we're doing. We're just sharing what we're doing, but that doesn't mean that we're going to be right. It doesn't mean that the opposite side of our trade is foolish. I mean, I never feel that way. I just feel like when I take a trade, it's probabilistic for what I am looking for, but it doesn't mean that I think whoever is selling what I'm buying is foolish. And if you do think that, if someone does think that, you know, that's on them and says a lot about them. But we do have to kind of have a thick skin here. Hopefully in the chat, everybody is very kind and, you know, positive, encouraging. We're all just trying to do the best that we can. But certainly, you know, it would be foolish to say somebody else's trade is foolish, in my opinion.
Yeah, I think it's anyone who, you know, calls any other person foolish because of a trade doesn't understand the trading game, right?
Right.
It's it has nothing to do with. It doesn't make sense to me.
It doesn't, because not everybody has a different time horizon. Everybody has a different goal that they're, you know, maybe you're looking for 5 points, maybe you're looking for 100 points. You know, there's too many factors for any one given trade to be either genius or any one given trade to be, you know, ridiculous. Um, Dangerous, absolutely. I have opinions where there are, you know, something is dangerous. I have opinions where something is probabilistic. But again, you know, it's your trade. Just it is what it is. That's your trade, and stick to your strategy. Exactly. Stick to your strategy, and just because we're sharing what we're doing doesn't mean it is truth or anything like that. We have no idea what is going to happen in the market. That's just the way it is, and nobody who says they do actually knows what they're talking about. Most likely, if they truly believe they know what is going to happen in the market, then they're actually somebody to stay away from because nobody knows.
Yeah, I think it shows something about the person
Mhm.
saying it.
Mhm.
It's you know, the reality is no one can predict the future, and
Right,
that person
absolutely.
who is predicting the future with 100% certainty doesn't understand that the future cannot be predicted with 100% certainty, and
Right,
that tells you something about, you know, um, the belief system of the person, right?
right.
And who am I to say what's wrong or not? I mean, but the facts are no one can predict the future. There are things you can see coming, but even then, it's not 100% certainty. So I don't know. Don't want to put anyone in a uncomfortable position. But if we see anything not very nice in the chat, we will.
Well, yeah, absolutely. And I'm not sure that they actually said, I don't know if they actually use those words, but just disagreeing with somebody isn't the same as saying, like, I disagree sometimes with Victor's analysis. That doesn't mean I think he's foolish. I absolutely think he is the opposite of foolish, but that doesn't mean that his trades are going to align with mine every time. In fact, sometimes Victor and I can be on the exact opposite because he is a reversal trader. I am a trend trader. It would make sense that very often we would have a complete, and we should probably be concerned if we align sometimes, Victor, because we have different styles. But just
Exactly.
because my trade doesn't match Victor's doesn't mean that he's foolish or I'm foolish. That's just we just have to really be careful about that.
Exactly true. And we have GU for those who are wondering. GU is coming back. Remember, I think it was born 2944, or some number which is similar to that. One of our great members in our chat, we talked about the FOMO, right? Price looked as if it left us behind, and price does that all the time. It gives you, moves that, and I thought that too. I saw that. I saw, well, if it goes up, I see this buying coming in. If it goes up, then it's not mine. I'm gonna let it go, thinking it's gonna go up, and that's very typical of the market. The market shows you all kinds of things, putting you to put that is makes you think one thing and does the opposite. It happens all the time, and that's why I don't trust my opinions as much to trade them. I have my plans, my rule based system, and that's what I'm going to follow, which is does not depend on my opinions.
Mhm.
We have a structure here that's supposed to hold on the 1 minute, so we can see if it closed below. It looks like it's going to close. That move is quite weak. Um, Typically, you wanna be seeing the move coming, moving away from it, and it got invalidated right there. Okay, so the 2 minute has been invalidated as well. So we're only left with a H1, not an H1. This is a 2 minute order block. This is the next structure that I'm going to be looking. So that's how I trade. I trade all the time. I keep updating the chart whether or not the structure has been invalidated or not. I do like to leave the structure there so that I know, okay, it broke one already or it broke two already, because that is important information as well. So now where I'm looking for this area to be respected and reacted upon for my signal. This is the GU. This is the pair that we have a daily signal from and a weekly signal from, right? Or a weekly reason to look for a long in this case, and a daily reason to go for a long. So if we have a reaction, potentially I can take this trade all the way to the daily and the weekly targets, right? Potentially. But it still has, that's way too ahead of us to think that way. First, it needs to actually trigger on the lower time frame, and then later on I'll see, okay, at the end of the day, is this something I want to take for another day, a swing trade, or overnight, or actually hold this for much longer, a more mature swing trade that is. And we are in that H1 order block. It makes a lot of sense to me. There's a lot of alignment. So let's go to the 5 minute. Here, that's the 5 minute we're currently in, and we want to see buyers coming in right now. If it doesn't happen, then it's not mine. Then it's likely not going to reverse, and I don't want to have anything to do with it. So don't get ahead of yourself. And this is just one example, that one of the trades that I'm considering, that is just one setup. The the uh, the stop, I would put that just as we have it here, below the structure. How much lower? This is just an example. It doesn't mean I'm going to have my stop necessarily there, but the point is it's going to be below the whole order block, right? How far you want to put it, that's up to you. So that is the trade. I haven't gotten a signal yet, but we are seeing some kind of buying coming in. Look at those two 1 minute bars are telling us that there is some buying. Let's see on the H2 very nicely. You see that's the first sign, right? It's reacting on that order block. First sign, now we need that follow through, and then we could, depending on your system, you could have your entries already or not. Depends on you, of course.
Victor, Crazy Mystery is asking about TJR and if he is in the Fivers community. I know who TJR is from YouTube, but I don't know anything about. I'm not familiar if he's a part of the Fivers community. Do you have any idea?
I don't have any information on that. I don't
Yeah.
know. I don't know that. I haven't never seen that initials before.
There you go, crazy mystery. Hopefully that helps.
May or may not be. I have no information. All
Victor,
right.
it's 10 o'clock already, or for me, 10 o'clock.
Yes,
The time
actually, it
flew
is.
by this morning.
Yes. That's how it goes on when we stream, especially when I stream with you. Time
Mm,
flies away like the
hi.
Concorde. For those who don't know what the Concorde is, that is perhaps another generation.
Say it
Um,
again.
the Concorde, the airplane.
Oh, okay.
Yes, the supersonic Concorde airplane. That's how fast the time passed by.
Seems like it, sure.
All right, this is the end of our stream. It is. I would like to thank everyone. I would like to actually, before we continue, before we end the stream, I would like to request your support for our channel. Hit the like button and or subscribe to the channel if you think this is something that you appreciate, that you want to see more of this, and you would like us to keep on bringing you good content, authentic, not hyped Lambo think, no, authentic, real trader doing real stuff, things that can help you, right? Real authentic things. So hit the like button. We will have a session in Discord in about 43 minutes. Everyone is welcome to join. The way to get in is through buying an account with the Fiverr, and you will be able to get free access to our Discord community. It's going to be fun. We're going to have a workshop and discuss various trading related topics. Thank you, Deanna.
Yes,
From
pleasure as always, Victor. Thank you so much to our chat, who has been phenomenal today. It really makes it so much fun to be here, and we really appreciate you all.
That is indeed the case. I would like to say to everyone, hope to see you tomorrow. Bye bye.
Take care. Bye.